is composed of some bad actors and some good actors.
A number of assets as we head towards the start of the European trading day. The Asia handover is positive. The Fed story, also that China story we talked about before the break around expectations of support for the market there. Perhaps S&P futures up by 0.4%, catching that updraft, if you like, from the Asia session. The Bloomberg US dollar index down by 0.2%. So despite all the tragic events that are taking place in the Middle East and war is happening, of course, despite that, we are seeing money coming out of the dollar. You might expect that to be different. The US 10-year yield then, just checking on where we are there, ahead of CPI, 4.54%, Tom.
European futures looking in positive territory then. DAX futures pointing up by 0.5%. Here in the UK, the FTSE 100 looking closer to that 7,700 level, looking to add 37 points, Anna.
Okay, so looking to add to the start of the European trading day. Futures are positive. Let's see what that delivers at the start of trade. This is the move in FX markets while we wait for these equity indexes to open up. This is the move in FX that I was talking about. So we are seeing, despite all geopolitical tensions on display, we are seeing some movement lower in the dollar. The Fed conversation perhaps taking centre stage. Recent moves in bond markets, of course, as well. Talking about stocks then, we are up by 0.4% on the FTSE 100. The sovereign bond column looks fairly unified, doesn't it, in terms of what we're seeing, certainly at the long end here in Europe. So this is the 30-year in France, in Spain, in Germany, and in the United Kingdom, where we see buying of those sovereign bonds, and we see those yields coming down. So that is in contrast to what we saw through much of September, where we saw steepening of the curve as a result of long-end bond market moves and sovereign yields at that long end going higher. Here's the oil price. Interesting to note that we don't have a green box around WTI crude and Brent crude, fairly stable versus recent history, around $85 a barrel on Brent. Interesting commentary coming through from the Saudis and the Russians just in the last half hour around oil. You can find that on the Bloomberg terminal. More on that with Eddie van der Velde at the end of this hour. But broadly speaking then, Tom, a positive picture for risk assets this morning, despite the geopolitics.
And on energy and the IEA report that comes out later today, the energy sector currently gaining 0.6%, despite the fact that oil prices have lost most of the gains that came through following, of course, that conflict and the Hamas attacks in Israel. The consumer, of course, and particularly luxury, was in focus for us yesterday. Heavy selling, that was the worst hit sector yesterday, and that weighed on the CAC current, which ended the session lower, even as Europe posted modest gains. Today, a bit of a reversal. The consumer sector currently gaining 0.5%. Technology also getting a bit of a bid, gaining 0.8% with some of the big tech names in the US that powered the gains yesterday for the NASDAQ. And of course, lower yields is helpful to that sector as well. Basic resources looking to add about 1%, currently adding 1%, 560 points coming through for the basic resources sector. And other sectors that stand out so far in the morning, industrials and financial services. Financial services adding 0.7% across the benchmark. You're looking at gains of around 0.5% here in Europe. So you're set, it seems, at this stage, at least, very early doors, of course, for 3 straight days of gains across these European markets. Anna.
Okay, Sam Unstead joins us from our Markets Today blog to talk us through some of the stories that are being covered on that blog. And Sam, we're seeing gains across European equity markets, gains through the Asia session as well. Here into Europe, I mean, do we credit the Fed minutes with this, or is it the Fed conversation more broadly? You know, the more, I suppose, up-to-date commentary we're getting from Fed officials.
Yeah, I mean, if we're talking particularly markets today, I think actually the most of this is coming through China. You know, so that appears to have helped that risk-on sentiment today. The Fed minutes yesterday, I think, were broadly as expected. You know, the higher for longer narrative sort of really has come into the fore now, and I think the comments that you saw there were broadly, you know, what people were anticipating.
Sam, how consequential could the IEA report be? As Anna has said, there's been some lines coming through from the Russians in the last few minutes or so. Brent down about 0.1% in the session so far. What are we looking at in terms of the next steps for this oil market?
Yeah, I think this is an interesting move this week. So obviously we had the big spike on Monday. That's now mostly come out of the market again, but those risks are still underlying. US inventories yesterday, that's helped that come down a little bit further. The IEA report is just going to add to those extra factors that are around that, but then obviously underlying all of that is the risk in the Middle East, you know. And at the moment, the fact is no one really knows where that's going to go. The risk has come out of the market for now, but we shall see whether that continues over the course.
So we've unwound the oil price back down to that $85 a barrel level. You mentioned China and that Chinese banking story that we've kept talking about this morning. How significant is this then, Sam? I mean, in itself, perhaps not much, but the way that it was very quickly translated into an expectation of broader support for Chinese stocks.
Yeah, so I mean, with all Chinese stories, you go straight to my colleague Sophia Hortry-Costa and ask her the eternal question on China: is this a bazooka? Is this the moment? She said no, but it is very significant. And actually, Tom, you were saying a little bit earlier, this is sort of a sign, potentially, that what people have been looking for, that kind of stabilization of the market, particularly the equity market, could be coming down the line. This may not be the exact move itself, but it may point to a more optimistic view on stimulus coming through in the future.
Okay, Sam Unstead, thank you very much indeed on the energy markets and, of course, the response from China's sovereign wealth fund to put some kind of level of support under Chinese equities. Sam Unstead, of course, from our Markets Today team, the Markets Today blog. Thank you. You can get more, of course, from Sam and the rest of the team on the front page of the Bloomberg UK website or by typing T-Live Go on the terminal.
Here are some of the events we're watching out for today. At 9 a.m, as we were just hearing from Sam, the IEA releases its monthly oil report. Also watch for an OPEC report later in the day. At 9:30 a.m, the Bank of England publishes results of its credit conditions survey. That can be really interesting in terms of the demand for credit, not just its supply. At 12:30 UK time, the ECB releases its account of its September monetary policy meeting. And at 1:30 p.m. UK time, we will get the latest CPI data out from the United States. And that's going to be really the focus for markets, isn't it, Tom?
Okay, coming up, EasyJet shares losing altitude, dropping just an hour after announcing a big Airbus order. Oil fears, of course, playing their part as well. We'll get more details, particularly on that order, consequential, of course, for Airbus. Stay with us. This is Bloomberg.
tag on the product may read "Made in the USA," but the sign on the CEO's door often says, Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Welcome back. This is Markets Today. 8 minutes into the European trading session. European stocks up 0.6%. Let's dig into some of the details, though, and check in on some of the individual stocks on the move with Joe Easton. Joe, what is standing out to you?
So EasyJet was down at around 4% at the opening of trading. I haven't got that on my screen, but luckily I do remember because I just looked at it and it was down 4%. It's now down around 1%. Now, analysts are noting that they've actually upgraded some long-term targets. So they are saying they're going to look to be making around £10 profit per seat rather than £7 over the next few years. And analysts saying that is positive. Dividends potentially resuming as well. We did see a bit of a read across in Ryanair. The producer, Mohammed, is telling me we're going to get those prices up on the screen. I'm hoping we do because my memory is not going to last this long. But we also saw a bit of a read across in TUI. That one was slightly higher. I think it was fluctuating at the open. There we go. We got them. We've got Airbus as well, ticking higher. EasyJet is buying 157 Airbus jets, a massive $20 billion order, and that one is ticking higher as well. EasyJet, as I said, down around 1% and a little bit of small read across in that one. Now, I think we're going to flip over to the next screen. At least I hope we are. There we go. Perfect. So Ericsson, now that one's surprising because it dropped 3% in the US after that impairment, $3 billion impairment announced after the close. But one report I was reading was saying that this was kind of priced in, given they have seen the value of those assets declining in line with the market. Publicis over in France reiterating their guidance. This is the advertising company. Now that is a bit of a relief given that WPP already warned on their profit just a few weeks ago. So that is looking pretty strong over there. Brought up Nokia in case there was a read across from Ericsson, but not too much at the moment. ITV, now the UK CMA announcing a competition probe into broadcasters ITV and the BBC. Not much in terms of that, but ITV does say they are cooperating with that, so we'll wait to see what happens on that one. Finally, on the board, the one that I'm most excited about, Wagamama, all those chicken katsu curries up 37% after a takeover from Apollo. Private equity snapping that one up. And then Wise in the UK, this is TransferWise, listed recently, had a really poor run, but they are upgrading their guidance today. And finally, Goldman Sachs says you should be selling shares of ASOS and Boohoo, not only due to weak weather conditions in the UK, but also competition from Shein in China, which is encroaching on their turf. According to Goldman, they recommend selling ASOS and Boohoo for the first time in 6 years.
It's amazing how, in an inflationary environment, how cheap clothing can get. Joe, thank you very much. Joe Easton from our equities team. Let us talk about what we're seeing in markets right now with Alberto Gallo, co-founder and chief investments officer at Andromeda Capital Management. Alberto, very nice to have you with us. Let's take a long view, I suppose, at what we're seeing in markets right now. The debate seems to be shifting from how high Fed rates go to how long they stay at elevated levels, the extent to which a rise in bond yields has done some of the Fed's work for it. Give us your thoughts on the trajectory for rates from here, Alberto, and how that influences investment strategy.
So short term, into Thanksgiving, into year end, we have seen signs of a pause of the Fed wanting to control the long end part of the yield curve. So essentially, there's probably no hike in November because already the long-term yield going up has tightened financial conditions. There is more of a neutral language from the Fed. This has particularly shifted after the events of the last weekend. Now, it's also important to keep in mind that the U.S. government has to spend at a clip of 7% deficit next year. So we can't have the government and Treasury Secretary Yellen don't want to have a too high 10-year yield. Having said that, the higher for longer environment is here to stay. And we think the Fed is just massaging, controlling the pace of this increase in long end rates to avoid accidents. So we have a tactical situation where investors were very underweight, very worried about recession this year. Yields have gone to record highs in the short end and in the long end. And a few things have broken in Q1, but because of the underweights, we are going to go higher in our view into year end. However, next year, the growth inflation mix is going to get a bit worse. We're going to have a bit less growth. We're going to have persistent inflation still around, high 2, low 3% in the US. And the last phase of the cycle is going to be harder. For central banks, it's going to be harder to bring that inflation down.
Alberto, so I want to get your views on what the trade is then in that environment. Your counterpart over at UBS, Mark Haefele, CIO there of UBS Global Wealth Management, coming out with this line. I just wanted you to reflect on this and get your response. We think, this is from Mark Haefele at UBS, we think 10-year US Treasuries can deliver 14% total returns in our base case for a softish economic landing in the US, 10% in an upside scenario of re-accelerating growth, and 20% in a downside recessionary scenario. Your response to that kind of analysis, do you align with that view?
I think Mark's view is definitely valid with a long-term perspective. There's more value in bonds. We prefer to still not go into the long end part of bonds. We think that there is going to be a little bit more pressures on the 10-year to go a little bit wider. But we definitely have a situation where there's more value now. However, next year we have to think about the fact that yes, the US can spend a lot into elections, but for example in Europe spending is more constrained. There's countries like in the periphery that are more constrained. The UK is more constrained. So if we think about the gap in growth, the US is going to do still pretty well. In Europe, there's going to be more pressure. We still want to be in, there's going to be also more supply. So we still want to be a little bit careful before extending duration. That's been a very popular trade this year, to be long duration. And, it hasn't really worked until recently. So it's very important to be tactical here because governments will continue to issue a lot of debt. So we prefer to be in the private sector bonds. We think governments continue to help companies. One of the names you mentioned, for example, TUI or a lot of other names also in the high yield space got government help over the last few years, whether it's travel, some banks, some telecom. So there is public to private support as governments continue to spend. So we prefer to be in private sector corporate bonds that beat inflation, they yield more, and we're probably still going to have a contained default rate environment, not a heavy recession, but a mild recession, if anything, next year.
And your expectations for Europe, specifically maybe Germany or the broader European story, if you prefer, Alberto. We're seeing commentary coming through from the CFO of Commerzbank saying that the mood in Germany, in the German economy, is worse than the reality. I experienced quite a negative mood when I was last in Frankfurt in a room full of finance professionals, but maybe the reality not quite as bad, Commerzbank is saying. What are you expecting to see on the German and European front?
There is an increasing widening gap between the US and Europe. So we see essentially a mild technical recession in Europe, in Germany and Italy in the current quarter and potentially even into next year. It's not a heavy recession. It's enough to shave off some of the earnings from equities. It's not enough to bring default rates, corporate default rates up substantially. But in this context, what are the things that can break next year? There are some governments, both in developed and emerging markets, that have kept spending a lot, and this will come under pressure. If we think about, for example, the Italian budget that's coming up later this month and BTP spreads, that's something that we see as a vulnerability. And in emerging markets, similarly, there's countries that have funded historically at 3-4%. Now they have to fund at 10%. So we're still in a higher for longer world where there's a lot of capital structures that were stable with 2-3% rates and are no longer stable with high single digit or double digit funding rates. And it's a great opportunity because there will be good companies or good countries that are able to continue to fund.
Yeah.
The bad ones will restructure or default, and then there's the ugly ones that will have to sell assets and potentially survive. And it's great for investors to be able to select these differences while the market so far is traded relatively in a uniform way.
Okay, Alberto Gallo, co-founder and chief investment officer at Andromeda Capital Management, on the need to do your homework, preferring corporate bonds, and with a call there for a mild recession. That's the forecast from Alberto next year. We appreciate the insights. Thank you, Alberto. Let's get some of the other top red stories on the Bloomberg terminal this morning then. Bloomberg has learned that Goldman Sachs is suing Malaysia's government in the London International Court of Arbitration. The complaint is over the supposed violation of obligations in a 1MDB investment fund settlement back in 2020. Goldman Sachs says Malaysia did not appropriately credit assets against the guarantee provided by the bank. Malaysia's government recently threatened to sue Goldman over missing payments. China's sovereign wealth fund has increased its stake in the nation's biggest banks for the first time since 2015. The move stokes speculation that authorities will intensify efforts to prop up China's sinking stock market. A growing number of Chinese economists are calling on the government to directly intervene with a stabilization fund to buy stocks, a move the authorities have refrained from since the market crash 8 years ago. And in the US, Republicans have nominated Steve Scalise as the next House Speaker to succeed Kevin McCarthy, while the GOP majority supports him. The looming fight over his election could risk delaying the US response to fiscal deadlines and the war in the Middle East.
Coming up on the programme, we will get to some of the IPO news that we have for you this morning. We will discuss Birkenstock's US trading debut as the German shoemaker's IPO disappoints. That's next. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
Just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
When you start a company in Switzerland, the first thing you need to do is really leaving the country. So we actually built a global company right from the beginning. We still have significant room to grow in parts of Europe. We are quite strong in Japan already. We just started in Latin America, big market. China, of course, a big focus for us in the next years.
What does the path to success in China look like now? Is it sort of back to some situation like normal? How does it feel in China?
Right now in China, it feels like we're still a very small brand with a lot of potential. There's a lot of macroeconomic uncertainty. We feel we're still so small as a brand that the macroeconomic element is a bit less important because we have so much room to just grow market share. We're really at the point where I think we've proven product market fit. And now it's about scaling it.
Back in 2019, there were about 15 people working in China. Today, it's a team of 150. There is not really a wholesale partnership network in China. So it's all about building our own stores, our own mono-brand destinations. And this will take time, but it's a great thing to have so we can really engineer the growth over the next years.
That was Martin Hoffmann, the CFO of the Swiss sportswear maker On. He's also the co-CEO. You saw the other co-CEO, Mark Mayer, in there as well, talking about when they went public in 2021 and reaching the $1 billion mark in terms of sales last year. You can catch more of my conversation about the life of a CFO on this episode of Chief Future Officer. That's airing tonight at 6:30 London time or 7:30 p.m. if you're in Hong Kong.
Okay, staying in the clothing space then. German sandal maker Birkenstock plunged in its trading debut yesterday. That was the worst first-day showing for a US listing of over $1 billion in more than 2 years. For more, let's bring in Bloomberg's equity capital markets reporter, Julia Fioretta. Julia, was there a pricing issue with this IPO? What went wrong?
There probably was a pricing issue, Tom. It was priced quite richly, even when it came at just below the midpoint of the range. It was still priced above, in terms of multiples, above peers such as Nike and Lululemon, and these are sort of very well-established brands. So there was probably that issue in terms of pricing it probably a bit too high. And in markets like these, that's not something really you can afford to do, especially given the 3 IPOs last month haven't done as well as they did initially on the first day pops. Those are mostly fizzled out. Instacart is now trading below its offer price. So it certainly calls for caution in this kind of market. And obviously, yes, it does mean that there was probably pricing a bit too high if it doesn't manage to hold on to even hold on to that price, essentially, in its debut.
And it was a very difficult day, wasn't it, for all kinds of consumer-facing clothing, luxury stocks. I mean, I know it's not in the same basket, if you like, as LVMH, but certainly the negativity around that story yesterday certainly weighed on that sector. Anyway, what does the negative performance mean for the broader IPO market?
It's probably fair to assume that it will shut for a while or at least go on pause. Other prospective issuers who may have been looking to launch their IPOs might now sort of take a step back and wait a bit. because these are still quite tricky markets to navigate. There was a lot of optimism a month ago, and now that seems to have mostly evaporated. The markets had come down quite a lot at the start of this month, and that was on the sort of interest rate outlook of them staying higher for longer. And obviously now we have the conflict in the Middle East, which is adding to more uncertainty and more volatility.
Julia, thank you very much. Bloomberg's equity capital markets reporter Julia Fioretti. That's a markets focus for you. Back to the politics and the violence in the Middle East. We are seeing the US Secretary of State Anthony Blinken arrive in Tel Aviv. We had notification that he landed a while ago. There we see him just having descended from his plane. We know that a unity government has been formed in Israel, and we know that one of the first actions was to vow to wipe Hamas off the face of the earth. We wait to see where this takes us. 1,200 people dead on either side so far since the start of this weekend. 339,000 displaced, we understand, in Gaza. We'll continue this conversation shortly. This is Bloomberg.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Markets Today. We're 30 minutes into our European trading day. Here are our top stories. US Secretary of State Anthony Blinken has arrived in Tel Aviv as Israeli troops amass near Gaza. President Biden issues a warning to Iran. Israel's defense minister vows to wipe Hamas, quote, off the face of the earth, as the nation's new emergency government signals a major ground offensive is imminent. Plus, as investors weigh that geopolitical risk, markets brace for the latest inflation data from the United States. too many threads to keep track of, I suppose, in terms of the market commentary at the moment. Tom, rightly, everybody focused really on the geopolitics and what is happening, the violence taking place in the Middle East. From a market's perspective, though, headlines, no doubt, on the Bloomberg around CPI set to guide markets to some degree.
Yeah, markets for now looking through the human cost of that conflict and focus more on what the Fed does next and how the inflation data ties into that, as you say. So producer prices out of the US yesterday coming in slightly higher than the surveys expected. A lot of that was down to energy, so some are just writing that off to some extent. CPI is expected to come in modestly in the latest print out later today from 3.7% to 3.6%. And then, of course, you have the Michigan survey around inflation sentiment, consumer sentiment out tomorrow as well as a guidepost. But there does seem to be some consensus now amongst the markets that you are closer to pause territory, if not already there from the Fed, given what we've heard from those officials about the work that has already been done by the central bank or for the central bank by the recent run-up in yields. Of course, that dynamic has shifted slightly over the last couple of days. Across the benchmark here, then, you're seeing gains of 0.4%. So we are on track as things stand for a third straight day of gains for European stocks. We've had 4 straight days of gains for US stocks, led by some of the upside coming through from the tech sector, and that sector is doing fairly well in the European session today as well. The DAX adding 50 points here in the UK, the FTSE 100 up by 27 points, up 0.3%, despite the fact that we have a reminder of the stagflationary risks here in the UK from some slightly softer than expected data, economic data that came out around 7 o'clock UK time. Again, across your benchmark, gains of 0.4%. In the sectors, the breakdown is this. 2 sectors in the red currently, major sectors in the red. Food just by about 0.1%. Utilities down 0.2%. The gains coming through from the auto sector, 0.8%. Energy getting a pickup, up 0.9%. And also some upside for technology, given the lift coming through from the handoff from the US, up 0.6%. And the lower yield environment also, of course, aiding that sector. That is the read across your sectors so far this Thursday, Anna.
OK, let's leave the markets to one side and let's focus in on what's happening in the Middle East. Israel's siege of Gaza in the wake of the deadly attacks from Hamas brings the prospect of a humanitarian crisis into view. 2 million people live in Gaza, a small strip of land which is now cut off from water, electricity and food supplies. Israel has called up 300,000 troops for a potential ground invasion of Gaza. We are joined by Francesca Albanese, who is UN Special Rapporteur on the situation of human rights in the Palestinian territories. Francesca, very nice to have you with us today, and thank you for joining us. If we're waiting to see what we get in terms of any ground operation here, but what are you hearing from people on the ground in Gaza about conditions there at this point?
Good morning, Anna. Thank you for having me. Can I make just one comment? Gaza was already under a serious humanitarian crisis before the 7th of October, with 7 out of 10 people depending on humanitarian aid, 0.5% of the population, half of the population unemployed, and 5% of the available water suitable for drinking. So just to put things in perspective, because there has been on Gaza an unlawful blockade which has lasted 16 years, during which the people of Gaza have endured 5 major conflicts, which have killed 4,200 people, including 1,200 children, just to put things in context. It's very difficult to say what I'm hearing from Gaza, because what I hear is what I learn mainly from the United Nations, who are on the ground and with whom I'm in touch, and the media. I lost contact with the organizations I normally work with, the human rights organization I'm in touch with. And again, at the moment, over the already unlawful blockade in Gaza, which has lasted, as I said, 16 years, there is an additional aggravating cutting of aid, electricity, water, and food, which might lead to starvation. This is more critical than just a humanitarian crisis. This risks to be a crime against humanity.
Okay, and I'm sure the Israeli government would push back against that potential characterization. Francesca, what is the ability of aid agencies to get aid into Gaza at this point and support for that population?
My sense is that the situation on the ground is extremely chaotic. because of the continuous bombardment. It's been incessant. People who have been there, journalists and United Nations officials alike, speak of an unprecedented brutality, unprecedented violence. They've never seen such a thing. And so I think they are coping with what they have. But the problem is that medicines have run out. The hospitals have already reached their capacity. How can they function without electricity, food, and water? So again, I think that the United Nations are at loss like anyone else.
What do you think other nations in the region, Francesca, can do to aid this, either with aid or with other support, perhaps behind the scenes? I'm thinking here of what role Egypt can play, either in talking about aid or borders being open temporarily or negotiating prisoner swaps. Are there roles for other players in the region that could alleviate suffering?
There should be, but there is none. I think coming forward. I've seen a statement or a communication by the League of Arab States, which was referring to the fact that the Arab world is very divided. And this is the thing. I think that the world is divided when it comes to Israel and the occupied Palestinian territory. And this aggravates the situation for both Israelis and Palestinians. Both of them deserve solidarity and support at this tragic moment, remembering that Israel bears responsibility for an occupation that has lasted 56 years, and with a blockade, an unlawful blockade that has created a level of desperation that is unconscionable. So this is, again, I do think that it's a moment for the international community as a whole to act wisely and even-handedly, and I don't see any of this anywhere in the Arab region, in the West, or in other regions in the world. But it's an opportunity to act even-handedly, to bring some sanity and legality back to the center of the discussion.
Francesca, given your experience on the ground, and just to kind of push on that point around Egypt's role, are you getting any sense from your contacts on the ground or elsewhere that Egypt would consider, under what conditions and under what scenario do you think Egypt would consider opening that border point at Rafah?
Look, I have no idea because, I mean, no precise idea, because what I see is that crossing point has been bombed. So there were some people who were trying to exit through Rafah, which has been closed for, I mean, other than for humanitarian reasons for a long time anyway. And there is no intention from Egypt to open any humanitarian corridor for the time being. This is what I've heard, but it needs to be confirmed with Egyptian authorities, which is not something I've had the chance to do in this latest hours.
Okay. We've heard from European countries, Francesca, that they have paused aid at this time to Gaza, reviewing that. What do you make of the questions that Europe is now asking?
But I understand that this has been retracted, right? There was a European commissioner who announced the cutting of aid to the Palestinians. And then there was another statement by the European Union retracting, challenging this. So my understanding is that aid will not.
Yes, they said they would stop it, and then they backtracked and said they won't stop it, but they're going to put it under review.
But this has been ongoing for many years now. Again, it seems to me that they're taking, some in the European Union is taking an opportunity to further politicize an issue which is terribly humanitarian and needs a political solution in line with international law. But we need to really, Anna, what I would like to leave the audience with is that it's important to recognize humanity and equality in rights, dignity, and freedom to all, because it doesn't seem to me that this important, fundamental, basic concept is central to the discussion. I mean, European Union, not all of it, but many influential states have expressed their unconditional support to Israel, which is absolutely understandable, while many Israeli civilians have been killed, and Israel as a whole, as a people, have been hit really deep, profoundly. But at the same time, we shouldn't forget the impunity that has been granted to Israel for many decades now, which has led or has contributed to this dramatic situation, because the human rights community in Israel, Palestine, and internationally has warned about the possible dangerous consequences of impunity for many years now.
Okay, Francesca Albanese, UN Special Rapporteur on the situation of human rights in the Palestinian territories. We appreciate your time. Thank you. More ahead in the next couple of minutes. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or you're advising?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Okay, let's get back to the IMF and world meetings in Morocco. Bloomberg's Francine Lacqua is there with a guest. Francine.
Tom, thank you so much. We're very pleased to be joined by Mario Centeno. He's a Banco de Portugal governor. Governor, thank you so much. We also have a fly, actually, who's in the shot here. It happens sometimes where it's very, very warm. Governor, talk to me a little bit about monetary policy. I mean, given all of these unknowns, given the, frankly, horrific week there's been in terms of geopolitics, what does it mean with how you look at risks, where we'll be in a couple of weeks, and what that means for central banks?
Thank you for having me. We've been in a cycle of monetary policy that reached a very important moment in September when the ECB stated that with the current level of interest rates, we will be making a substantial contribution to the 2% objective. And I think we will get there. We will get there with the continuing this monetary policy stance, holding on for a while until we are totally sure that inflation is coming down.
But Governor, given the geopolitics, and I have to say everyone's extremely tense in Marrakesh trying to understand where this could end. There's worst case scenario, there's best case scenario, and then there's a lot of stuff in between. How do you, I don't want to talk about game theory, but if you're a central banker and you look at these geopolitical risks, like, how do you try and mitigate?
Well, we need to be predictable so that we can focus on our stabilization policies. We decision makers and policy makers, we need to provide stability. In our case, in the monetary side, price stability is our main focus, but one of the preconditions for that is financial stability. So this has been our main focus in the last couple of years. And let me tell you that even if this may sound weird, we have been successful at doing that. We brought inflation from 10.6 down to 3% in 1 year.
Yes.
This is good for the purpose of our mandate, but also, of course, for the economy.
Governor, this conflict that we don't know where it ends, right, in the Middle East, did you think we'd be at peak rates? And does the conflict change where you see the price of oil going, and therefore where you see peak rates?
Well, we don't see that yet in the numbers. Markets have reacted in a very, they didn't change much, not even in terms of...
Why? They don't know how to price it, or they're just waiting to see?
I think they are waiting and see, and they are also waiting for the reaction of policymakers. So there's a little bit of endogeneity here, maybe. So we need to stick to our previous understanding of what was going to happen according to our models and the way forward in terms of our decisions. And I think if we all do that, we will be able to provide the stability that I was mentioning before.
And Governor, are people talking about it here at the IMF, Marrakesh, or again, is it too soon because it's happening now and we don't really know what happens?
Yes. In these meetings, we deal with lots of scenarios, with many possibilities. We need to stay, as we used to say, to portray the middle of the road so that we are, again, predictable. This was the best thing out of the meeting in September, that we can now be predictable. People can count on a specific path to inflation and to interest rates, and that's our main communication point.
And that's pretty clear now. Of course, the sequencing, interest rates first and then QT. Again, what happens when you really start tweaking and when you start changing QT? How much volatility are you expecting in the markets?
We prepared ourselves very well to this cycle of hiking in interest rates. We created TPI, this transmission protection instrument. Financial stability is of the essence to continue in this cycle without creating problems to financial stability. The issues around fragmentation in the euro, these are not topics that we discussed this time around, and this was because we did prepare very well for this. So going into QT or the other topics in our around our instruments in the toolkit that we have, we need to continue in this vein and to make sure that financial stability remains very, very strong.
And Governor, labor dynamics have been holding up really strong. Again, does it change in the coming months or quarters? Do you worry about a credit crunch, about people not being able to repay, for example, some of the loans or their credit cards, or just a spending that's reined in because of geopolitics?
Now, labor market has been very, very strong in Europe. It's actually one of the pillars of the present situation. We need to preserve it. The labor market in Europe today is much more flexible and mobile than before. It's incredible how we added 10 million jobs to the 2019 figure in 4 years with a pandemic in between. It's really very, very important for us to keep up with that and to preserve. This is something that not only monetary policy needs to take into account, but of course other economic policies also.
What do you worry about the most? I mean, it seems like we're going to the winter months. We don't know what happens to the price of oil. Could it be very delicate?
We need to monitor. We need to remain data dependent. We need to make sure that we don't overshoot in our policies, because if we do something that derails the economy more than we don't grow for 5 consecutive quarters according to our forecast, zero growth quarter on quarter. This is very important to keep in mind. And we need to continuously monitor the situation so that we can act. And by acting, I mean really adjusting rates according to what is needed.
Governor, thank you so much, as always, for giving us a little bit of your busy schedule. That was Mario Centeno, Banco de Portugal. Governor, with that, Anna, I'm going to send it back to you in London, and we'll have plenty more throughout the day here from Marrakesh.
Francine, thank you very much. Bloomberg's Francine Lacroix, as she says, in Marrakesh at those IMF and World Bank meetings. Coming up, we will get back to the markets of the moment. A rise in producer prices has markets on alert for a potential CPI surprise stateside later today. We'll get back to the market analysis next. This is Bloomberg.
We're investing in a lot of different capabilities and features that makes the in-store shopping experience that much easier, that much more compelling, whether it's price check, browsing inventory in this store, so that we can really make that experience as convenient and as simple as possible.
Convenient, simple, that's sort of what people have needed in the age of COVID. Is that here to stay, or do we go back when finally we all hope that the pandemic will be behind us in some way? Do our changing shopping habits go back again?
What's really interesting about retail in my 20-plus experience is that convenience never reverts itself. Now, the form of convenience has shifted, whereas, say, in 2000 to 2010, a lot of convenience was driven by more stores nearby. Now it's stores in addition to digital. Yeah. There's nothing closer than the phone in your hand.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Bloomberg.
Okay, 54 minutes into the Thursday trading session here in Europe. Let's talk about what is happening then across these markets and bringing Eddie van der Walt from our M Live team. We had slightly hotter than expected producer prices yesterday out of the US, Addy. What are we expecting from consumer prices, that all-important print, later today?
Yeah, you know, it's really interesting because usually producer prices come second, and therefore, because you've already had the consumer prices, which is the more immediate and important input, markets react really strongly to that. But because we had producer prices coming in first, that gives you a fairly good indicator for where CPI is going to land. So I think traders are now, they were positioning for a very, very soft CPI, as we can see from the bond market. But I think there's a bit of a rethink in the markets about just, you know, how soft this number could be, and I think people are starting to think maybe there is potential for an upside surprise, and I think that would mean a lot for the bond market.
Thinking about inflation takes us to oil. Oil prices just on the rise a touch, but previously this morning that erased all the gains of the week, which of course were driven by geopolitics. We just heard from the Saudis and the Russians sort of reaffirming their cooperation around oil. Anything significant for you? Oh, and we're waiting for an oil report, top of the next hour.
Yeah, absolutely. Look, the oil market at the moment is definitely being propped up by curbs in supply, OPEC and Russia. Definitely, the fact that they've taken supply out of the market is what has kept prices from, just falling significantly. And they have defended previously anything below 80 or close to $70 on Brent. And I think that what they're signaling here is that they may do so again if prices fall too much. At the moment, though, talk might be enough to kind of put a floor under the oil price because, I think the bears have been scared a little bit by the fact that they have run into these supply cuts every time that the price sells off.
Eddie, should we brace for more volatility, just very briefly?
Yeah, look, the VIX on stocks in particular has been very, very low. And I think, as we get into the end of the year, particularly with interest rates much higher, you've got to ask whether there's not going to be a little bit of an uptick in the VIX as we move in.
Our colleague Simon White, I know, on the Markets Live blog, writing about that subject. Thanks to Eddie van der Veld from the Markets Live team. You can get further insight and analysis on the markets. MLIV Go is the function to use on your terminal. If you want to stay across the Markets Today blog, you can go to TLIV Go on the Bloomberg terminal, or you can click through to the blog from the Bloomberg UK website. The Pulse is up next. They'll continue to monitor the situation in Israel. US Secretary of State Anthony Blinken now on the ground in Israel. This is Bloomberg.
Are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Could face bigger challenges next.
Was going to keep rate World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Marrakesh as we continue our special coverage from the IMF World Bank meetings in Morocco. Now, coming up on today's program, U.S. Secretary of State Antony Blinken arrives in Tel Aviv, and President Biden issues a warning to Iran as Israeli troops amass near Gaza. Israel's defense minister vows to wipe out Hamas as the nation's new emergency government prepares for a possible ground offensive. Plus, we're live from the IMF World Bank meetings in Marrakesh with guests including the Belgian Central Bank Governor Pierre Wunsch and the European Commissioner for the Economy, Paolo Gentiloni. Now let's get a look at European markets map. I know we have some really good analysis on the Bloomberg terminal, and of course a piece which I find extremely important and also quite touching by our John authors. Now, shares for the moment advancing before a report that's expected to show a slowing in U.S. inflation, which will help the outlook for the Federal Reserve's next steps. The picture across the board for the moment, you can see gains across the board. I'm looking at some of the movers that are moving the most. I have Ericsson dropping after it said it expected a record of an impairment charge, and then EasyJet also falling after the airline said it will order an additional 157 Airbus SE A320neo jets. We're also getting IEA actually coming out with a report. Oil price is pulling back, they say, because it reflects demand destruction. Of course, the big story on oil is exactly what will happen if the conflict between Israel and Hamas spreads. We don't have any report on that yet. I know there's a number of banks trying to look at worst case and best case scenarios. Certainly the IEA has not weighed in on that. Now, to the politics, and of course, let's get on the ground. We hear and we know that the U.S. Secretary of State Antony Blinken has landed in Tel Aviv as Israeli troops amass near the Gaza border. At least 2,400 people on both sides, mostly civilians, have died in the conflict between Israel and Hamas so far. Bloomberg's Oliver Crook joins us now from Tel Aviv. So, Oliver, what's the latest on the ground?
That's right. So we have Blinken, who has just arrived here, and really, before he got on the plane, really sending us a message of support for Israel and the Israeli people and the government. Support that is really very much needed in Israel. Politically, yes, if they want to stage a ground invasion, but also militarily, right? There are 350,000 more soldiers active today than there were a week ago, particularly if things escalate in the north with the border of Lebanon and Hezbollah. They will need that equipment and also to replenish the Iron Dome. In terms of the last 12 or so hours, politically, we have that unity government declared and presided over by Benjamin Netanyahu, which really brings together also the opposition parties, bringing together what has been a very fragmented Israeli political situation until basically Saturday. And there have been continued strikes overnight in Gaza since Saturday. Their death toll there is at 1,200 people that we know so far. They've cut out from some food, water, and electricity. In terms of what we've heard from the Israel Defense Forces, we have heard that there are more than 300,000 members of ground troops that are amassing near Gaza, that they're making preparations, they say, for the next stage of war, which will come when the timing is opportune. We also heard from them that we do not have a decision yet from the political leadership on whether or not to invade Gaza, but the military is in a position to do so if that does happen. And remember, this is a war effort that will be infinitely complicated by the 2 million people living densely populated in Gaza, and of course by the number of hostages, which we don't have a full figure on, that were taken by Hamas over the weekend.
Ollie, thanks so much. Oliver Crook there, live in Tel Aviv. Now, the crisis, of course, in the Middle East is the big focus, the central focus here at the IMF World Bank meetings. With me now, Nouriel Roubini, Chairman and Chief Executive of Roubini Macro Associates. Nouriel, thank you. It's been a tough week for everyone, and it's extremely difficult to see where this ends and what it means for the global economy.
Yes, it's hard, and you have to think about scenarios. I would say the baseline scenario is one in which Israel occupies Gaza. Is going to get ugly, but the conflict remains contained to there. And therefore, the markets so far are essentially pricing this one as being the baseline. That's why oil prices have not gone very much, because there is not really a threat to the supply of oil in the Gulf. There was a little bit of a risk-off with impacts on bond yields and on gold and so on. But even markets, equity markets have recovered because there are other economic views, like maybe the Fed staying on hold rather than hiking again, that are positive. But of course, there is a downside scenario in which Israel tried to destroy Hamas. Iran, that is a major backer of Hamas, decides to unleash Hezbollah in Lebanon, and then you have a second front in Lebanon, maybe a third one in the West Bank. And at that point, Israel will have to attack Iran. If that were to be the case, of course, then the supply of oil from the Gulf gets, disrupted, and then you could have a spike in oil prices, and then the economic impact will be huge. I mean, in 73, we had the Yom Kippur War. In 79, we had the Rain Revolution. There was an oil shock that then led to stagflation all over the world. It's not the baseline scenario, but it's a risk.
But it's a risk. I don't know the probability of that risk, or whether we shouldn't even be talking about probabilities. Are we talking 10%, 30%, or do we just not know?
The honest answer, we don't know. Different people may have different assessment. I would say that certainly the baseline probably will be at least a 2/3 probability that the conflict remains contained to Gaza. Whether then it's a 20 or 30 or 35% probability of something escalating, the honest answer is nobody knows exactly. But the market seems to be discounting the possibility of a massive conflict throughout the Middle East for now.
But if oil goes to even 120 or 130, let's say, how problematic is that for central banks and the world economy?
Well, it's problematic in two ways, because higher oil prices implies that most economies go into a slowdown of growth or a recession, and then there's a rise in inflation. It's a stagflationary shock, and then becomes a huge dilemma for central banks, because either there's raise rates to try to fight that inflation, and then you have a more severe economic contraction, or if you decide that you care more about growth, and then you don't raise rates, then you have a de-anchoring of inflation expectation, like it happened in the 70s. So whenever you have a negative supply shock, this stagflationary then becomes a real dilemma for central banks, and we don't know how they're going to be answering to this shock.
It's also like there's just a global sadness, right? A lot of people are speaking out. I don't know whether this impacts spending.
I think that actually it impacts, first of all, business confidence, especially in Europe, where economic activity is effectively contracting, has been contracting for a number of quarters. I would say that if you are any business, there's an option value of waiting. If you have to decide how many more workers to hire, where to do more capex. And there's been a slowdown, for example, in employment growth in the Eurozone so far. The economic contraction on the GDP production side has been more severe. So this could be actually a tipping point where firms decide, I have no idea whether this conflict is going to spread or not. Let me wait and see. I'm not going to hire anymore. I'm going to stop some of the capex. And that could become self-fulfilling and imply that the Eurozone is already borderline into recession. Same thing with the UK, going to an actual recession. So even the probability of something bad happening affects through uncertainty decisions of the business sector and even of consumer. Consumer may slow down consumption as well.
Nouriel, how critical are the next couple of days or weeks? So if we have boots on the ground in Gaza from Israel, is this an escalation point that could actually happen quite quickly?
Well, I think that most people expect that Israel at this point has no choice but go into Gaza and get rid of Hamas forever. And they didn't do it in the past. It's going to be painful. It's going to be ugly.
Be a strong escalation, right?
It really an escalation, but I believe that the markets are already pricing in that Israel has no choice but going into Gaza. The question is going to be, once they go into Gaza, whether then skirmishes that are occurring in the north become more severe, whether Hezbollah in Israel start a real war, and therefore there'll be a hand of Iran directly in that happening, and then the conflict will become regional as opposed to being limited to Gaza. Then the markets are pricing in that something ugly is going to happen in Gaza, unfortunately, and there's no other choice. So they're not worried as much about that, but about whether there's going to be an escalation.
Yeah, I mean, I guess there's always a choice, but we'll leave the politics to one side. Nouriel, thank you. Nouriel Roubini, Chairman and Chief Executive Officer of Roubini Macro Associates. Coming up, concerns are mounting that the Israel-Hamas conflict could spill over across the region. We talked to Rami Mortada, the Lebanese ambassador to the UK. That's next, and this is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware. And that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Welcome back, and let's return to our top story, the ongoing war between Israel and Hamas. Israel has also traded fire on the Lebanon border with Iran-backed militant group Hezbollah. There are concerns that Hezbollah could attack Israel if Tel Aviv moves to a full ground invasion of the Gaza Strip. Joining me now is Rami Mortanda. He's the Lebanese ambassador to the UK. Rami, run us through then what you're hearing in terms of new intelligence. Do you expect this war to go deeper into Lebanon?
Well, good morning. I think it's all in the hands of the Israelis. From our side, we are fully mobilized to make sure that there is no spillover towards the Lebanese side of the borders. The situation is tense, as you can imagine, but it's relatively calm. From our side, we are fully committed to the terms of the cessation of hostilities that took place in 2006, and that has been reigning in since then. But since Saturday afternoon, we're sustaining Israeli provocation. So our will and our commitment to de-escalation needs to be met by the other side. And that's why international partners are called on to make sure that this takes place.
I mean, here's the thing, Rami. So Hezbollah has a major bloc in the Lebanese parliament. They are a designated terrorist group by the United States. What would the Lebanese government's position be if Hezbollah decides to go into an all-out confrontation with Israel?
Well, the Lebanese government has been fully mobilized immediately after the events on Saturday to make sure that calm and stability is maintained in South Lebanon. And any action from our side is purely of defensive nature and is purely destined at making sure that self-restraint prevails on both sides of the border. But at the same time, no country can stand idly when it's provoked and when its territories are attacked. That's why I said it takes two to de-escalate, and the other side should also self-restraint in order to maintain the calm and stability at the border.
Yeah, so it sounds to me like you're going to maintain a united front as a Lebanese government, and that includes Hezbollah. In terms of the Palestinian refugee camps, and there are quite a few in the south of Lebanon, could we see a flare-up in violence there?
Well, obviously, the social fabric in the entire region is similar. So when such a level of atrocities and violence are committed against the Palestinians, you would imagine that this tension would naturally propagate not only towards Lebanon, but throughout the region. So you would expect a high level of tension. And I think it's up to the Israelis to what extent they would take this deadly war instead of the tragedies we've been seeing since Saturday, being a wake-up call towards reversing this race to the bottom and starting.
I mean, that's your view. That's your view, Rami. But in terms of what you can do today from your end, are you speaking to the British government here in London since the beginning of the week? What have those talks been like? Are you appealing for them to take a certain form of action?
We are in close consultations with all our international partners in order to pass the message that from our side, there is no will for escalation. At the same time, we will not stand by if our territory is attacked, and I think this is an obvious right for every state. So the message which should be passed is that self-restraint is necessary from all sides in order to maintain the peace and stability and allow the UN force in South Lebanon to pursue its mission, and the Lebanese army also in cooperation with the Lebanese army. That's our
The
message.
Arab League met late on Wednesday in a closed-door session in Cairo. You have the Secretary of State from the United States, Antony Blinken, in the region as well. A line crossed the terminal in the last couple of hours that the Iranian foreign minister is looking to do a regional tour, and part of that regional tour, he would like to stop in Lebanon. What role will Iran take on, either on the ground or diplomatically, in the coming days? Rami, well, it looks like we've lost him there. That was Rami Mortada at the Lebanese embassy here in the UK. Let's get you a bit of a snapshot of some of our other coverage in the pipeline. We'll get back to the IMF World Bank meetings. We're going to be speaking to Pierre Wunsch, the ECB Governing Council member and the Belgian Central Bank Governor. That's next. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because this is really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right, I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Our studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Welcome back to the IMF World Bank meetings here in Marrakesh, where the European economic outlook is a key focus. Now, with us now, Pierre Wunsch. He is the governor of the National Bank of Belgium and, of course, ECB Governing Council member. Thank you, Mr. Wunsch, for joining us. There's a lot to talk about. It's tricky, I imagine, setting at the moment forecasts for the economy, given all of the geopolitical uncertainty. What are you most worried about?
You know, we've had a succession of shocks, so uncertainty has been high for a while now. And of course, with what's taking place in the world right now, I think we have to live with that. But we have to recognize that uncertainty is not going to go away in the coming months.
Governor, there's also, of course, the spread widening between Italian bonds and a lot of other peers. What does that mean for how you set monetary policy?
Well, we are independent, and we are at least supposed to set monetary policy regardless of, you know, the fiscal position. Sometimes we have interactions that are positive or less positive, but the situation is very clear. We have a number of countries in Europe. It's not only one that have a deficit that is too high, and they have to work on bringing that deficit to a level that makes their debt sustainable.
What does it mean for PEP? So there have been a number of governors saying that actually that you should start talking about ending this sooner. Is that still possible?
I'm in favor of at least reopening the discussion. I understand that we have sort of committed to, you know, keep reinvesting until the end of 24. But I don't think there is any strong rationale for doing that today, except that we have announced it. We have hiked for 150 basis points, so I think we should at least reopen the discussion.
But so I understand. Is it, you know, less likely that you can reopen the discussion about ending PEP earlier than has been announced because of the widening spread between Italian bonds and
you know, let me put it this way. At some point, we are going to stop PEP reinvestment. So we need to think about a world where we are going to stop PEP reinvestment. And, you know, I don't want to be in a situation where, you know, stopping a bit before, a bit later makes a huge difference, because that would mean that we have a problem, and then we have probably to deal with this problem with the instruments that would allow for this problem to go away, or at least to be under control in a sustainable manner, not depending on whether we do PEP reinvestment or not with a delay of so many months.
So what are you telling me, that widening spreads is not your problem? Is that how to put it simply?
I'm telling you that I'm in favor of reopening the discussion. You know, we have to be cautious, and when we use our instruments, but I'm still of the opinion that we should reopen the discussion.
Governor, are we near peak rates right now, and do you worry about the market seems to have stabilized somewhat in understanding what the ECB is trying to do? Is there something that actually they still struggle to assimilate?
No, I mean, I guess my answer on terminal rate would be maybe. If we reach terminal, I would say maybe, because what is comforting first is inflation is going down. That's important. It's going in the right direction. But also the numbers we've seen, especially for core in the last readings, have been in line with our forecast. It was, you know, it's been a while that it was not the case. So on the basis of that, I think the forecast can be used as sort of anchor. And if we keep seeing inflation numbers align with the forecast, then we don't have to hike anymore. Now, if we would see inflation going above what we have in the forecast, not marginally, but, you know, in any more or less significant way, then we would have to do more. So my answer is really maybe. And we have to recognize that the uncertainty on inflation has been, you know, it's one of a kind. I mean, you can compare to the 70s, but there are many differences. So I think we also have to recognize the uncertainty, and that's why my answer is maybe instead of yes for sure.
But how much do you worry about oil prices? This is the big unknown because of what we're living through geopolitically.
I mean, it's one element. I mean, we have upside risk to inflation. We have downside risk to inflation. Obviously, we see that the tightening of monetary policy has had an impact on credit developments, maybe even more than we thought. That's a downwards risk to inflation. And of course, higher oil prices are an upward risk. So we'll have to look at the balance of the two and you know, keep looking at the numbers as they come.
Governor, when's the ideal time to really do QT?
Well, we have already stopped, you know, some reinvestments, and again, I think it's more about the direction. We are in a tightening cycle, and that means that, you know, there are no strong rationales anymore for keeping reinvestment. It doesn't mean that I'm in favor of stopping, you know, in any brutal way, But I would wish we can reopen the discussion and look at a timing that would be in line with the current situation.
Ideally in your mind, what time frame are you looking at?
I don't have any specific numbers or target. It's just, to me, it's more like a question of being consistent. Yeah. We are in a tightening mode, and then we are still reinvesting. Maybe it's good that we rediscuss, the issue.
Governor, thank you so much for joining us. That was Pierre Wunsch, the Governor of the National Bank of Belgium, and of course the ECB Governing Council member. Now, coming up, we'll also bring you the latest on the Israel-Hamas war as the conflict enters its 6th day. Then we speak to Mr. Gentiloni of the European Commission, and we also have a good roundup of everything that's being discussed here at the IMF World Bank meetings in Marrakesh. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
U.S. Secretary of State Anthony Blinken arrives in Tel Aviv, and President Biden issues a warning to Iran as Israeli troops amass near Gaza. Israel's defense minister vows to wipe out Hamas as the nation's new emergency government prepares for a possible ground offensive. Plus, we're live for IMF World Bank meetings here in Marrakesh. In just a moment, we'll also be joined by the European Commissioner for the Economy, Paolo Gentiloni. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here with more special coverage around the IMF annual meetings in Marrakesh. Now, the U.S. Secretary of State, Antony Blinken, has landed in Tel Aviv amid continued escalation in the Israel-Hamas war. At least 2,400 people on both sides have died in the conflict so far. Now, the Palestinian permanent observer to the United Nations says there needs to be a humanitarian intervention to avoid a looming catastrophe in the Gaza Strip. Israel is preparing for a possible ground offensive in Gaza as the Prime Minister Netanyahu promises to destroy Hamas.
We are fighting with all our strength on all fronts. We went on the offensive. Every Hamas member is a dead man. Hamas is ISIS, and it will be crushed and eliminated just as the world crushed and eliminated ISIS.
Peace would require that the Israeli side to recognize that we exist and we are humans and we have national rights and aspirations, and these national rights and aspirations should be fulfilled, and there is global consensus on them. The two-state solutions and people to live in peace and harmony as good neighbors, which would require the end of occupation.
Well, Bloomberg's Oliver Cook joins us now from Tel Aviv. Ollie, so Antony Blinken has arrived. What can we actually expect from his visit?
That's right. He's just arrived in Tel Aviv, and he will spend several hours here. He will leave before the evening, though he will not spend the night here. And after that, he will head over to Jordan. And really the message that he carried with him as he got onto the plane to come here to Israel was that that the United States has Israel's back, and that is really the political message that Israel needs, particularly if it wants to wage a ground invasion of Gaza. It needs the United States' political support, but it also needs the United States' military support. There are 300,000 more soldiers today active than there were a week ago, and that requires a lot of equipment, plus not to mention all of the Iron Dome and intercepting all the missiles. That also will need to be replenished. But we also understand that Antony Blinken intends to meet the Palestinian National Authority President Mahmoud Abbas as well tomorrow in Jordan, so some diplomacy also on the table.
What's the latest on the ground in Gaza?
Yeah, so we have the new unity government here in Israel, but in Gaza there have been strikes that have been going on overnight. They've really been unrelenting since Saturday. We understand the death toll in Gaza to be 1,200 people. Those are the latest figures that we have. And the electricity is cut off, the food, the water. So really a very dire situation in Gaza. In terms of next step, we understand that there are 300,000 ground troops that are stationed near Gaza that are ready to move. But we did hear from the defense forces saying that the political leadership has not yet decided on a ground invasion in Gaza, though it is widely anticipated, and the military is prepared to do so if indeed they decide to. But it's a war effort, Francine, that will be intensely complicated by the 2 million people living in very dense population within Gaza, and of course the hostages that Hamas is still holding.
Ollie, thanks so much. Oliver Crook there joining us from Tel Aviv. Now joining us here from Marrakesh at the World Bank IMF meetings, Christian Keller, Barclays Head of Economics Research. Christian, thank you for joining us. A horrific week on a human level that we absolutely must always remember. You go through the corridors here at the IMF World Bank meetings, and people are whispering about worst-case scenarios. They're hoping for the best, but it's unclear actually what this means for escalation and what this means for central banks and the economy.
I think markets intuitively try to look through these episodes of geopolitical volatility, as tragic as they may be, as you alluded to. I mean, obviously, there was wrong on Ukraine already. I think the initial market reaction was also, we've seen this before, and, markets just look at history, and typically those are sell-offs that then later reverse. Now, we've seen it didn't work in Ukraine, and this also looks something that has just started in the sense you just talked to your correspondent in Tel Aviv, where now Israel is preparing to go into Gaza. I mean, there's once this general risk sentiment it could affect, but then importantly also the price of oil. I mean, we've seen some reaction so far, but markets are nervous, but have not overreacted, I would say. But of course, there's a lot of stake. You mentioned Iran. Yeah. You mentioned Iran has been an important supplier to the market, more important than in earlier. And these things could turn around, and then we may have oil prices again higher, and that has implications for the global economy.
Because the implications are so big, and I guess the worst-case scenario could be so bad, do you expect business confidence to take a hit?
Not for now. I think business is careful not to overreact. They will wait for now. I mean, as horrible as atrocities are, it is something that could be contained in the region. As I said, the global element here is really the oil price, and of course that would affect everyone. But I think so far the market will continue to not to anticipate too much. But of course, as you say, I mean, the implications are big. This is something that, for Israel is the biggest thing that happened in 70, 80 years, and so. I think we have to really wait and see.
Yeah, and you're right. We just don't know actually what happens next, if there's escalation or if we just don't know at the moment. When you look at central banks around the world, so this could be the Fed, but also ECB, have we reached peak interest rates?
Well, it certainly looks like it. And, we still think that the U.S. may do another hike. We get some data today on the CPI. But overall, it is clearly, it seems quite clear that the core central banks have now reached the peak, except for the Bank of Japan. There's the one big exception. And now the question is, of course, will they really stick to the mantra higher for longer?
Yes.
It's convenient now. They want to indicate to the market not to price out or price in the early cuts. But of course, markets also know that central banks don't always have to be time consistent on this, that when the time comes, in first half of 24, depending how inflation and how growth looks like, central banks may still change their mind. I think this is why markets are not fully pricing the higher for longer as much maybe as central banks would like it.
But do you worry that, again, interest rates at 5% for a protracted time, even 6 months, could actually end up breaking a lot of things?
Well, I think certainly this has been a synchronized global hiking cycle. It was a Fed, but everyone else. And we've moved interest rates from zero or sometimes negative to what seems to be now restricted levels. And you keep that should have a big impact. And, we see it in the real estate sector. There's a lot of talk about what remains in terms of risks, in particular in commercial real estate, but also even generally housing, not so much in the US, but in Europe. So the impact is there. The global credit cycle has turned. And now the question is, and not to overuse that word, but will it be soft?
Yes.
Or will there be cracks? And almost certainly there will be some cracks, but it seems they won't be systemic. And I think we're on that side as well.
But how did people that were expecting a recession in the U.S., why did they get it so wrong, a hard recession?
That's a good question. And I think it first has to do with housing. A lot of people thought housing would be much harder hit. Much more unemployment one would have expected. It didn't happen. Particular reasons, the 30-year mortgages, a lock-in effect, the fact that there's no activity on the secondary market, and then how well the economy held up. So there was still demand for, from people who wanted to buy houses. The labor market is surprisingly strong. So I think these are reasons why the usual models didn't work. All those excess savings that are still in the system. So the fiscal impact that was, the impulse that was given during the pandemic is still working.
But Christian, do you worry that actually some of the models looking at inflation are not working going forward? So we had this warning from the IMF on Monday saying that they're expecting inflation to come back up. But I mean, that would be a big surprise to not only markets, but central banks.
That would be certainly a big surprise. And I think there are two risks here. The one, as we talked about already, is oil.
Yeah.
Because so far we had nice negative year-on-year effects from oil prices. That will turn, if oil, let's say, goes to 100 or so, you start having that reverse. Now, central banks would tell you they look through this if it's a supply shock one-off. But of course, if that starts to feed into core inflation, I think this is what the IMF has pointed out, that's an issue. And then, and I think this is still very, very important for central banks, is the labor market. I mean, the US labor market data has been massively stronger than people expected. This labor market is still creating 200,000-300,000 jobs a month when people thought this would be a lot less. So we are very far away, even what I think Paul said, 100,000 a month would be kind of the neutral. And so, I think this is something that is very key. That's why we watch the data, the outcomes in inflation, the wage growth, etc. And even for Europe, the labor market remains key, I think, for central bankers. And that could possibly lead to even further tightening if things don't evolve as they have in the last few months, where inflation has been really nicely coming down.
Tristan, thank you so much for all of your insight. Christian Keller there, the Barclays Head of Economic Research, joining us here from Marrakesh at the IMF World Bank meetings. Now, coming up, we'll speak to Paolo Gentiloni. He's the European Commissioner for the Economy. That's, again, live here from Morocco. That's next, and this is Bloomberg.
adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Welcome back. Now, this week, the IMF lifted its global inflation forecast for next year and called for central banks to keep policy tight until there's a durable easing in price pressures. Now, the IMF reckons that inflation will be 5.8% next year, with cuts made to its forecast for economic growth. Well, I'm very pleased to be joined by Paolo Gentiloni. He's the EU Commissioner for Economic and Financial Affairs. Commissioner, thank you for joining us. I mean, there's a lot going on, especially this week as we try and figure out what geopolitics could mean for Europe, for the price of oil, and of course, for the economy. Where are we right now?
Well, of course, we are, first of all, under the impact of the new war, the terrorist attack against Israel, not yet measuring fully the economic impact. Of course, there is a human impact, a geopolitical impact that could affect trade at global level. We don't see major impact in oil prices for the moment, but this is, of course, increasing the uncertainty of the economic perspective. For the rest, as far as Europe is concerned, we have a weak economy, but we are not in recession. And this is mixed news. It's, of course, bad news to have a weak economy, but if we think to what we were expecting 1 year ago, we were expecting a worse situation than the one we are in.
But, Commissioner, do you worry that if there's an escalation actually in the conflict between Israel and Hamas, this hurts business confidence, this hurts consumer confidence, and it puts Europe in a much more precarious position?
Sure, this is the impact of conflicts. We hope that escalation will not be there. But at the same time, we know that Israel has to defend itself. And it's too soon to measure economically. Of course, we are here very near to where the crisis is going on, and we all feel this impact. But to measure it economically is honestly too soon.
Commissioner, talk to me a little bit about how inflation you think will behave. So we had this warning from the IMF. There could be a kind of a false trend going downwards with then a little bit of a lift that may happen even if oil prices, stabilize.
Yes, this is possible. In Europe, we had good news on inflation. In September, inflation was at 4.3%. Impressive decline. Just to remember that inflation 1 year before was double-digit in the EU. So will this trend of decline continue at the same speed? Our estimates are not negative. But of course, this doesn't mean that we should declare victory on inflation, This means that we still need prudent fiscal policies because the problem is not solved, and the risk of oil prices that for the moment is not materializing, but you can't exclude it.
Yeah. Commissioner, we also see a widening spread between Italian bonds and other European bonds. Do you worry about a fragmentation, again, Italy being in the spotlight for all the wrong reasons?
Well, the level of this spread is at the moment not at all matter of concern. I think that we have increasing interest rates all over the euro area, so the spreads that we Italians know very well, because we follow the spreads, are not in particular matter of concern. What is important, I think, for all European member states is to keep prudent fiscal policies, because we can't, if we have monetary tightening, we can't undermine monetary tightening with expansive fiscal policies. And we have different tools to support investments and growth. At least until 2026, we have this extraordinary common funding. So the message is prudent fiscal policies and using of the common funding to support investment and the economy.
So one of the people that participants here at the IMF World Bank meetings are most excited to meet is the new PBOC governor, because it's his first travel abroad since being appointed. How should Europe actually deal with China economically?
Well, I think we grow up in recent 2 or 3 years after a period of a little bit of optimism in relation with China. We were thinking that trade relation with China in itself would have evolved in the positive way, a better level playing field among the European Union and China, etc. And we saw that this is not automatically the case. So I think we grew up, and now we are more demanding in our trade relations, less optimistic. But this doesn't mean at all that we figure to decouple with China. This is something completely impossible. Not only wrong, but things impossible are worse than wrong. They are impossible. So there is a connection of the economy. We have to reduce risks in our supply chains and compete with China, but we shouldn't close.
But do you think we've seen a deglobalization, or certainly some of the trade scenarios getting less close and kind of pulled apart? Does this continue in full force?
Well, I've seen the recent data of the Kiel Institute, which is measuring the trade. And trade is in September in a stable condition after several months of decline. This is connected probably to the partial reopening of the Chinese economy, not so strong as expected, but it is going. And the level of trade, of course, is affected by reduction of globalization, but at a certain extent. So I think we should be now ready for a long period where supply chains are more secure, trade is more competitive, but this is not deglobalization. This is not decoupling. It's the new form of globalization.
Thank you so much, Mr. Gentiloni. As always, that was Paolo Gentiloni, the EU Commissioner for Economic and Financial Affairs. Now, coming up, we'll have plenty more from Marrakesh. Also, the ruble surging after the Kremlin reimposes some capital controls. But is it enough to stabilize the currency in the long term? We'll have full analysis next, and this is Bloomberg.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Welcome back, everyone. Now, Russia's currency could have its best day in a month after the government imposed some capital controls on the ruble. This comes as the Kremlin looks to reverse the third biggest depreciation in emerging markets this year. Well, Bloomberg's Rosalind Matheson now joins us from London. Ros, good morning. So how effective will these controls be in steadying the ruble?
Well, as you can see, we're seeing a reaction in the ruble today, having one of its better days in quite a while, but it's down really significantly across the year, one of the weakest currencies in the emerging market space that we've seen. And now we've seen the decision to essentially reimpose some of the controls that were put in the aftermath of Russia's invasion of Ukraine that compels the big companies to sell the earnings from their foreign sales back into the local market. That's to try and increase liquidity. Of course, we've seen the currency caught between competing things. We've got inflation, we've got cost of living pressures, we've got exporters squeezed, we've got demand for hard currency, and a lot of arrows being sort of thrown at the market to try and fix it. What we're hearing from Bloomberg Economics really is the view that this will possibly put a short-term floor under the currency. We've seen that knee-jerk reaction in the ruble today, but in the longer term, what you're talking about is a forex market that is fundamentally illiquid, very, very shallow, and in some ways dysfunctional. And just sort of moves like this in the short term might have that impact, but in the longer term, there are deep structural problems in that market that this will fail to address.
So, Ros, what does it tell us about the divisions that we have seen actually between the central bank and the finance ministry in Russia?
Well, it's interesting because the central bank has raised rates several times in recent months, sort of trying to put, again, a floor under the currency. And given those difficulties in the market, those interest rate increases have had no effect on the ruble. It's been a one-way move and it's all been down since then. And what we know is that the finance ministry was pushing for the reimposition of capital control some months ago and got strong pushback, excuse me, from the central bank, which was saying, like, we just want to use interest rates now as our mechanism. So there was that disagreement at the time. What's happened in between is hard to know. Is there now full agreement between the central bank and the finance ministry that these are measures that are necessary? Did the finance ministry just say, you know what, we have to do this no matter what? It's very hard to know because there have been these periodic disagreements between the finance ministry, essentially the government and the Kremlin, and the central bank about the best ways to tackle the challenges in the Russian economy and on the ruble since the invasion of Ukraine. But certainly it seems that in this salvo, at least, the finance ministry has won the day.
Ros, thanks so much. Rosalind Matheson there with the very latest on the ruble. Now, we'll have plenty more throughout the day here from the IMF World Bank meetings in Marrakesh. 2 interviews, exclusive interviews that we want to tell you about. Anna Botin, the Banco Santander Executive Chair, that's at 11 a.m. London time. And then Bill Winters, also of Standard Chartered, Chief Executive. That's a little bit later on. So we'll have full analysis on the banking system as well from Marrakesh. This is Bloomberg.
not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more, but
that's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
that really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience would get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Good morning from our world headquarters in New York. I'm Manus Cranny.
And from our studios in London, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Antony Blinken lands in Tel Aviv as Israel's new unity government signals a major ground offensive will start soon, and investors factor in the cost of a protracted war. Fed officials agreed to proceed carefully. Markets now brace for the latest inflation data, which economists are forecasting will show a further easing in inflation. And Republicans nominate Steve Scalise as the next House Speaker, but opposition from a group of hardliners threatens to delay the final vote and leave the chamber without a leader. A very good morning. It is day 5 of the equity market rally. The AAII, the survey of the bulls to the bears, shows a bullishness creeping in. 40% bullish reading on the AAII. You have an official narrative from the Fed, which is to proceed carefully. You heard it in the rhetoric from the various officials, but the minutes confirmed what the officials had already trotted out. Today is CPI day. Will we err to the upside above 3.6% year on year, or will it be a cool CPI, which will really invigorate the rate cut narrative for 2024. Asia is piping hot this morning, up 1.125% as China steps in and they spend $65 million on equities in banks. This is the first time that they've stepped in and bought bank stocks in China since 2015. It's not the cavalry coming, but it's about the tone and the message, which is we are here. We are going to defend the system and the banks. Asia Pacific up by 1.6%. The Hang Seng was up. Just reflect on Birkenstock at the bottom of your page, at the bottom of your screen. It tanked yesterday by nearly 16%, 13%. It opened at 41 bucks. It closed back 0.4%. And Europe is at a 3-week high. Good morning, Ms. Berger from New York.
Good morning, Mr. Cranny. Look, when it comes to this bond market, let me take you through the cross asset. We are pausing after the gains, after the rally we've seen of the past 2 days. Perhaps it is this anticipation of CPI, which you laid out, Manus. Perhaps it is a hotter PPI yesterday that sent the front end of the curve up to 5%. It backed down from that. So perhaps that helped reinforce that the sell-off, maybe it's back in store. Maybe we started buying bonds too soon. Brent crude, that completely erases some of the gains that we had seen post the conflict in Israel, post the attack. Brent crude, for the moment, it is moving higher. It's up 0.9%. That is due to the fact, likely, that we saw a show of unity between the Saudis and the Russians appearing on Russian state TV. Meanwhile, the Bloomberg dollar spot, it is down for a 7th day. Manus, it is headed for its longest losing streak in just over 3 years, very closely tied to the bond market story. And Manus, on that point, we've had weeks and weeks of discussing the bear market steepening, how odd and how forceful it has been. For those who have made money, maybe now it's time to cash in on the profits. A great story on the terminal about Schroeder saying they're closing most of their trades. Now the question is, do you go outright long bonds as the Fed looks to be nearing the end of its hiking cycle?
Well, it's certainly going to be the view from a couple of our guests. We've got PIMCO coming up with us in terms of positioning and duration. Now, I just thought we'd pick up from the JP Morgan survey. This, I think, complements what you're saying. This is a ramp higher. It's the largest ramp up in longs in 2 months. 28% of the survey from 22%. So this is about a rising outright long position. And that really underpins the thought in the piece that you've got, Danny, which is those steepeners are done. This market is now perhaps a little bit more interested in being outright long if that recession comes harder and heavier. And then, of course, the CPI readings will inject a new fuel into the Ferrari of rate cuts 2024. Danny.
Yeah, exactly. That is the risk, right? That we get something hotter from CPI and it completely undoes the rally that we've seen so far this week.
Okay, well, let's just reset. The U.S. Secretary of State, Antony Blinken, has landed in Tel Aviv in the last hour. He spoke to reporters as of last night.
I'm going with a very simple and clear message on behalf of the President of the United States and on behalf of the American people. And that is that the United States has Israel's back. We have the back of the Israeli people. We have their back today. We'll have it tomorrow. We will have it every day.
That was Blinken getting onto the plane. Bloomberg's Oliver Crook has now arrived in Tel Aviv. Oliver, good to have you with us. What is the latest on the ground? Good morning.
Right, Manus. So it's been a really very packed 24 and 12 hours, really. So we have the unity government. We can get to that in a little bit. But in terms of the military operations in Gaza, we've had a number of briefings from Israeli defense forces. So we know that they've continued to hit significantly on Gaza overnight and that they have been striking the Gaza Strip. There's a new death toll there of 1,200 people. Electricity, water, food are in scarce supply there. So humanitarian issues. We also know from them that there are 300,000, as many as 300,000 ground troops that are amassing near Gaza that are ready, they say, to move if there's going to be a ground invasion. However, there was a briefing earlier where they said the politicians have not yet made a decision on whether or not there will be a ground invasion, but the military stands ready. It is obviously, Manus, an event that is much more complicated by the fact that there are 2 million people living there, extremely densely populated, and of course, the hostages that Hamas has taken from Israeli territory still in captivity.
Oliver, what can we expect from Blinken's visit?
So he arrived just now. He will be meeting with Netanyahu and a number of others. And again, we heard him in that soundbite, really support for Israel and support that Israel needs politically, globally from the United States, particularly if they're going to wage a land war in Gaza, but also support that they need militarily. We know that they got some equipment yesterday, but they need to replenish the Iron Dome if there are more rockets to come in, particularly if there is a ground invasion. And then there is more tension on the northern border with Lebanon, with Hezbollah, of more rockets coming in. We also know that Blinken will go to Jordan tonight. He will meet with Mahmoud Abbas, so also some diplomacy on the cards.
So, Oliver, you mentioned it at the very start. There is a new government of national unity. Yesterday, we heard the central bank governor will stay on. So this is about all the bodies of Israel uniting at the moment, isn't it?
Completely. So every government official will hold their position. Anything that was going to change is going to stay in place for now. All bills will be tabled that have nothing to do with the war. This is a war government, Manis, and this is a war government that is composed of, yes, the defense minister presided over by Benjamin Netanyahu, but also the opposition, the former defense minister and the leader of one of the opposition parties, Benny Gantz. And this is really coming after a very intensely fractured Israel. I was here 6 months ago, and every single week you had over 100,000 people in the streets that were protesting the Netanyahu government. That has evaporated. It has really coalesced in a message of unity in Israel.
Oliver, thank you so much for that. That is Bloomberg's Oliver Crook reporting from Tel Aviv. All right, let's take a step back and talk about Fed officials because they have agreed policy should remain restrictive for some time, according to the minutes of their September meeting. Boston Fed President Susan Collins spoke about how the Fed is now approaching monetary policy.
In my view, this transition to a more patient approach, taking the time to holistically assess incoming information, was warranted for a number of reasons. In particular, it reflects the fact that we're likely very near and perhaps at the peak for this tightening cycle, with the risk of inflation remaining persistently high more closely balanced with the risk of slowing activity more than needed to achieve price stability.
Collins adding to the voices of many like Jefferson, Bostic, Logan, saying that the market has done the work for them, kind of having that similar peak language. Joining us now is Nicola Mai, sovereign credit analyst at PIMCO. Nicola, great to have you on the program.
Good morning.
You and the team just put out some really fantastic research about where we are in this cycle, your cyclical outlook. In that, you said recession risks appear to be higher than the market is pricing. What then needs to catch up or catch down?
I think you summarized it well. I think markets are way too sanguine about the economic outlook. I think risk assets are pricing an immaculate disinflation type outcome in which growth remains solid and inflation falls towards target. In our mind, the picture is darker than that. We think that the fiscal sugar rush that has been supporting growth will fade. Monetary tightening will kick in, and we think recession risk is quite a bit higher. So risk assets really look vulnerable here.
That's a fairly, Nicola, good morning. That's a fairly malevolent landscape to paint. With that in mind, how does that bear on the rate cut narrative? The Fed has guided to 2 rate cuts next year. If the landscape is as malevolent as you paint, will we see more accelerated rate cuts than we are presuming at the moment? They're telling us higher for longer. You're telling me something different.
I think a couple of rate cuts by the Fed, which is what's priced in the market, is probably a reasonable assumption. I think the key point here is that I think rates have peaked, not only in the US, but also in Europe. And I think inflation is going in the right direction. Growth is moving down, and I think that should really very much anchor bond yields, which we find really attractive here. So I don't think it's as much a view about the Fed cutting more than the market, but really the peak in rates anchoring fixed income valuations.
The conversation, though, from the Fed, even though some of them are talking about peak in rates, has been higher for longer, though. They're kind of pushing back still against the market narrative of cuts. Does that mean they're heading for a policy mistake if they're keeping rates restrictive for longer?
Well, I think central banks are really willing to accept the economic weakness that is coming because inflation has been a scare. It's been higher than it's been in decades. And I think central banks don't want to make the mistake of easing policy too quickly. And so I think higher for longer will last for the next few quarters. But obviously, the economic risks are going to be rising, and I think the possibility of a hard landing on tight monetary policy and fiscal support fading are significant, and that's, again, where bonds offer good value.
Okay, so they'll eventually work as the hedge that they're supposed to be. They haven't done quite what they're supposed to do for the past couple of years. Contrast that with, I mean, you're a buyer of bonds, but you are wary of credit. But I look at what Howard Marks is saying to me at Oaktree, and he's saying, credit gives me equity-like returns. It probably represents a substantial, or should represent a substantial portion of the portfolio. Of course, he's speaking his book. I get that. But you are a little bit more wary on corporate credit, given the recession risk. So are you de-crediting the book, or are you just taking less risk across the spectrum?
Well, I think if you think about credit, the duration component within credit, the risk-free component is attractive. If you look at the spread, meaning that how much you get on top of the risk-free rates or the duration component, to me that looks quite compressed. Equity valuations are obviously very elevated, but also corporate credit spreads are quite tight given the economic outlook. So we do want to take risk, but in a defensive way, in credits where we feel we are protected. I mean, think about agency mortgages in the U.S., for example, government guaranteed, really interesting spreads, and also a lot of structured products, securitized assets, senior financials to some extent. So you really want to take risk in a defensive way from our perspective.
When you are looking at some of the riskier spreads, I mean, as you said, they haven't blown out like they have in prior recessions. Do you expect this to be a typical cycle in that way, to see spreads, I don't know, getting to 2,000, a pretty hefty default type cycle?
So our baseline is not a deep recession. It's a mild recession, and there's or stagnation / mild recession. And the reason is partly that household and corporate balance sheets are in pretty good shape, and partly because financial stability policies have been very proactive. I mean, think about the UK LDI response or the FDIC in the US guaranteeing bank loans, bank deposits. So not a deep recession, but still a recessionary environment, and I think spreads will widen from here. It doesn't mean they will go to very wide levels, but I think mark-to-market investors should be cautious here.
I'm kind of torn between China stimulus and Japan, but I'm going to go with my gut, which is Japan, because we've had everybody on going max bull Japan, max bull equities in Japan, bull yen, because they believe YCC will be ripped apart sooner than we all think. How much of Japan should be in the portfolio now? What is your starting point for YCC being removed, and how much allocation upping are you doing to Japan? Are you taking more exposure to Japan?
I think that's a really good question, and one of the themes we mentioned is monetary policy divergence, and really Japan is going to be diverging. Most central banks are going to be cutting rates. We think that in the coming quarters, Japan will fully exit YCC, and also they will raise the policy rate in our baseline outlook. And as a result, I think our inclination is to be underweight Japanese duration. As I said, we like duration in the US, in Europe, also in places like Australia, New Zealand, Canada, where rate sensitivity is high. Japan, I think you want to go in the opposite direction.
Okay. Nicola, thank you. Unfortunately, we have to leave it there. Thanks for joining this morning. That is Nicola Mai of PIMCO. All right, let's get you caught up on some other top stories that are trending on the terminal this morning. And as Manus mentioned, China's wealth fund has boosted its stake in the nation's big four banks for the first time since 2015. The wealth fund says it also plans to buy additional stock over the next 6 months. The move comes as a growing number of Chinese economists and hedge funds call on the government to directly intervene without a stabilization fund for its customers.
And Caroline Ellison.
Caroline Ellison, Manus, you take it away.
Yeah, she took to the stand, Denny, for the second day yesterday. Star witness in the fraud trial of Sam Bankman-Fried. Ellison choked back her tears as she described the final moments of FTX, and Almeida reflected on all the damage that had been done. Damage, she said, that was done by Bankman-Fried's behest.
Now, over at Ford, it's become the latest strike target for the UAW after members walked out of its largest plant, a highly profitable pickup factory in Kentucky. Ford called this surprise walkout by 8,700 workers, quote, grossly irresponsible, and says it poses serious consequences for suppliers and customers. Manus.
Well, coming up, Republican Steve Scalise has been nominated to become the new Speaker of the House, but his fight for that title is far from over. We discuss. And later this hour, we catch up with Steve Blitz, chief U.S. economist at TS Lombard, on the shifting odds of a recession. He's calling for 6.5% in Fed funds. Has he shifted? Good morning from Bloomberg, New York.
or the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Bloomberg Brief. I'm Manny Scranney in New York, Danny Berger at London HQ. Well, the Republicans have nominated Steve Scalise as the next House Speaker, while the GOP majority supports him. The looming fight over his election risks delaying the U.S. response to the fiscal deadlines and to the new war in the Middle East. Joining us now is Kate Ackley from Bloomberg Government. Kate, the numbers, this is all going to come down to a small group of people in the Republican Party who hold the power to fill or kill his bid. So talk us through how close we are to electing a speaker.
Well, it's good to be here with you. I mean, it feels like Groundhog Day or some, we've been through this before. It's a lot like January when Kevin McCarthy was trying to round up the votes. So now we have Steve Scalise, who's the Republicans' pick. He's trying to get the votes. But it was a slim, behind closed doors, secret ballot election that where Republicans in the House did pick him, but the votes for him on the floor are not certain.
Yeah, I mean, he can't lose more than 4 GOP votes? That's such a thin margin. Can he get them?
We've already, been sort of tracking a whip list, if you will, and there are more than 4 that say they won't vote for him, including last night embattled New York Congressman George Santos said he would not vote for Scalise. There are a couple of, hardline Republicans say they won't vote for him. So he has his work cut out for him.
What has he got to offer those 4/5 holdouts? I mean, McCarthy, they say, offered a lot of deals. Some say he reneged on them. That's why they took him down. So what is it you think that Scalise has got to offer to the minority to get him over the line? I mean, he's been endorsed by Jordan as well, hasn't he? I mean, Jordan got 99 of the 112 votes that went against him. So what's he got to put on the plate?
Well, if he's got to be careful. If he gives up too much like McCarthy did, he's going to be right back where McCarthy was, 9 months later losing the speakership. So he has to be very cautious about giving in to any sort of deal making or making side deals with individual members of Congress. Yes, Congressman Jim Jordan did say that he would endorse Scalise for this role, but that doesn't mean he's bringing along all of his supporters. Some say they will not vote for Scalise.
And Kate, quickly here, I mean, there's this new sense of urgency. They can't conduct any business, including aid to Israel. The Biden administration is considering combining that aid. Quickly, would that bring GOP opponents of Ukraine funding along?
It's a risk. It's a risky strategy, potentially. It could bring on some Republican opponents to Ukraine aid, but it could also lose support among some of the more progressive Democrats who oppose, giving more aid to Israel. So it could bring on some, it could lose some. But by bundling them together could be a risk. And we were watching, last night, former President Donald Trump criticized the Israeli government. So will some other Republicans in Congress, be taking their cues from him and could support Wayne? We don't know, but it's something to watch.
Okay, Kate, thank you very much. Nail-biting stuff again. We're back at the brink for the GOP. Kate Ackley, the Bloomberg government, tracking Capitol Hill. We'll return with more news on apartment prices in New York. You like that on Bloomberg.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
This is Bloomberg Brief. I'm Menace Craney in New York with Danny Berger in London. Danny, there's a number, $4,350. That is the median rent in New York. Apparently it's down by 1.1%. Danny, I want to know where all the incentives went. There's a broker out there that got me my apartment. Max rent. I arrive in New York. I am calling the peak in New York rents. Isaac Rosenberg is the best. He's the richest broker in New York. No wonder he turned up with a gift last week. Right?
What a call out. I find this so sad because we're like, oh, the market's coming down. It's only come down 1%. It's still over
every 1% matters,
as you said, for the medium rate. I don't know, man. I'm going to time, whenever I move back to New York, the bottom of this market. So at this pace, you're still not going to see me for like another decade. I don't know.
I just want to know where they got this line that there were incentives to lure new renters. You haven't met the condo board that I had to divulge my life savings to them to actually get through the door. This is not the
if
truth.
Anything, it's the other way around. You had to give them incentives to take you on. All right, and just coming up, we're going to speak with Steve Blitz, Chief U.S. Economist at TS Lombard. This is Bloomberg.
have been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted. And I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
Welcome back to Bloomberg Brief. I'm Manus Cranny in New York.
And I'm Danny Berger in London. Here's what you need to know. Antony Blinken lands in Tel Aviv as Israel's new unity government signals a major ground offensive will start soon. And investors factor in the cost of a protracted war. Fed officials agree to proceed carefully. Markets now brace for the latest inflation data from the U.S., which economists are forecasting will show a further easing in inflation. And Republicans nominate Steve Scalise as the next House Speaker, but a group of hardliners threaten to delay the final vote and leave the chamber without a leader. Man, it's a quick check on your cross asset. We were just speaking to PIMCO, who says the peak is in for growth and for inflation. They want to buy bonds. The market not listening. 10-year yields, they move higher about 1.5% after 2 days of a rally spurred on by both haven bids and some language coming from the Fed, from Logan, from Bostic, from others, saying the market is doing the work for us. We also have a lot of supply coming on the front end. ICAP figures that this is the heaviest week when it comes to certain tenors of different bills. Brent crude, that is up 1.33%. It did make this round trip around from the gains that we had seen when Hamas attacked Israel over the weekend. But we did get the show of unity between Saudi and Russia that helped to spur a higher leg in Brent crude this morning. And finally, Manus, my superlative for you this morning is on the dollar. We're on track for the 7th consecutive day of decline. Should that hold, that would be the worst losing streak in over 3 years. I know you like a fun fact.
I love a fun fact, and I'll give you a day 5 for equities on the bid. So we're up for the 5th day on the S&P 500, not listening to the PIMCO narrative that a hard landing is coming. Risk assets are going to be under pressure. It's going to be recession rather than rate cuts that drives that bond narrative. Stocks are higher this morning by 0.3%. Again, the minutes from the Fed proceed carefully. That was the formal ratification of the previous rhetoric used by all of those Fed speakers that you have mentioned. Asia is up by 1.125 this morning. The top line for Asia risk, and indeed global risk, is not that the cavalry are coming from China, but you're seeing their sovereign wealth funds step in and buy bank stocks to the tune of 65 million. So China's sovereign wealth fund steps in for the first time since 2015. Is that a sign of real support or deep angst about the housing market in China? Either way, it has bolstered Asian risk. You need to know that as you look through the rest of the trading day. You are at a 3-week high for Europe. Now, in terms of Louis Vuitton, they had a battering yesterday. Birkenstock, what a flop. Down 13% on the open. That was their nemesis. They're trying to claw a little bit back this morning, up about 0.4% when we last checked in. So there you go. It's going to take a few more than $1,000 Dior Birkenstocks to help that along. But Danny, this comes down to the bond conversation that we're about to have. PIMCO want to be long duration and long defensive around the world. And that is critical to your call on bonds.
It is critical, but it's also critical to your call on equities, that risk markets are just not pricing in what he sees as a recession. But it was, of course, nuanced, Manus. He sees a recession, but it's not going to be doom and gloom. Sure, credit spreads will widen, but they're not going to blow out.
No, and we got the JP Morgan survey showing longs, the biggest long position in the survey at 28%, the biggest in nearly 2 months. So what we've got today is, of course, CPI. That's what we're waiting for, Danny. It's going to hit the tape at 8:30 a.m. Surveillance will be all over it. The estimates show that slowing inflation, so we're looking for 3.6% from 3.7%, will shape the outlook for the Fed. Joining us now is Steve Blitz, Chief U.S. Economist for TS Lombard. Good to see you. We've had proceed carefully. We've been told it by various Fed presidents. We've heard it in the minutes. But you had a call late last week that rates are going to go to 6.5%, yields will go to 6%. Have you shifted, given what you've heard from the minutes and from the Fed voices?
Well, I don't think the Fed is planning on it right now based on the minutes. Let's go back over the last several years. How good are they at forecasting anything? Look, I think they believe that we are at this wonderful point of stasis where the economy is slowing in their estimation, that disinflation continues, and that as a result they can hold at 5.25, 5.5, maybe 5 3/4, and let the 10-year do the rest of the work. And this will get them to their promised land of immaculate disinflation and 2%, and that's it, But I don't believe in fairy tales.
I do.
Yeah, I try to pretend I do until something abruptly wakes me up. So in this world, Stephen, what's going to wake us up from the fairy tale of immaculate disinflation? What's the shoe that will drop?
Well, I think it's not necessarily a shoe, but I think it's simply that growth goes on. We're not going to see a recession here in the fourth quarter. It's very unlikely. With that, the economy, I think what they're going to see is that suddenly, as the year turns, that the progress on disinflation begins to stall. The equity markets are still doing well. Unemployment is still where it is. And they're going to realize that they're slowly, instead of being in a stable spot, they're slowly losing a position. And adding to that, I just want to ask, because you've been talking about bonds, adding to that, the forces that raised the 10-year in the third quarter was $1 trillion in funding by Treasury, net new financing by Treasury, and on top of that, they added about $500 billion to the TGA account. Now, it's subject to change, but at the moment, they're saying they're going to raise $850 billion in the current quarter and only raise TGA by $100 billion. So that means that the Fed's Treasury is going to be adding more money to the economy for the amount that they're funding. So the net of that is that less upward pressure on rates. Now, you don't get that swing again in the first quarter. So you get this moment here for this quarter where things are wonderful, but then all of a sudden they realize where they are come the early next quarter, and they realize that the chase is back on.
So a chase to you looks like yields at 6%. Various people have come on the show with Danny and I, and they've said we're going in for a wild ride in inflation next year. So let's just step back a little bit from what you've just said, which is they're going to be shocked by what happens with inflation. But what is it that's going to drive that inflation spike next year? Because it was COVID, supply chains in the initial COVID period. Then it was labor and wages. So what is it drives the coyote moment in inflation next year?
I rather than think of it as a spike, right? Think of it as something which is really much more pernicious to the Fed. A spike is something they can keep looking through and say this is transitory. I think more pernicious for them is just the economy stabilizing at an inflation rate, let's call it 3%, let's call it more likely 4%, right? That with wage settlements coming in and just the general expectation of the way firms set prices, people expect wages. You know, even if inflation's coming off, most people are still way behind in terms of the level of prices versus the level of wages. There's room to go. So all of that creates an inflation rate that's stuck at 3-4%. That's the Fed's real fear.
Steve.
Yeah, sure. Sorry.
On that. No, you're good. Don't apologize for saying your opinion, Steve. Look, we had a lot of companies, a lot of corporates who gorged on debt in 2021 when rates were low. They were faced then with rates moving higher, but there was always this silver lining that they would come in. If we're talking about a world where inflation stays stubborn about above 4%, where are the weak links? Where are we not prepared for that stubborn, tenacious inflation world?
Well, I'm not quite sure I completely understand about where, because you were talking about these companies. Look, if they funded themselves in 21, that debt doesn't roll for 10 years. So they're fine. Secondly, I know, a lot of people talk about the rise in capital costs, which is true. But if you have 4% inflation, remember the revenue side of these companies is higher as well. And one of the hard parts about getting inflation down, and one of the legacies going all the way back to the 70s, which I know for most of you is, I could be talking about the 1870s, but one of the legacies of the 70s is a lot of deregulation and innovation that allowed both sides of household as well as corporate balance sheets to float. And so that, if you get a spike on the cost side from rates, over time, the revenue side picks up and vice versa. And so you end up in somewhat similar spots. So, I mean, look, the obvious problems are always commercial real estate. And that's obviously a difficult spot for the economy and for them and their lenders. But I see that more as a long-term drag than something that's acute.
Okay, I mean, look, there's a wonderful phrase from Bank of America where they say, the boa constrictor around the U.S. economy is commercial property. You talk about the longevity, and you have longevity, and you've seen many cycles. What is the problem with this bond market is that there's an entire group of people who've never lived through 3, 4, 5%. Normal inflation to me, and a normal mortgage rate to me, is around 5, 6, 7%.
Correct.
Okay? I lived at 15%, but 5, 6, 7% is what I lived with. So this is we're going into a world of new normal, but the Fed hasn't accepted that. They're going for an inflation rate of 2%, so they just must be absolutely wrong then in your case. They should adjust the inflation target based on what you said.
They need to keep the inflation target because that's sort of like the gold.
That's the last pillar of credibility for them, isn't it?
Exactly, and that's 100%. I agree with you completely. That's the reason why they're very reluctant to give that up. But you're right, and you see that in the behavior of the behavior of the curve, how quickly it inverted when they just hiked a little bit, and 5s, 10s inverted. There is still within the marketplace, and there will be for a long time. These things take 10 years to work themselves out of the market, but there's still this underlying bet that inflation must return to 2%. And I think, and that's the disappointment over time that the market's going to get to, but we're not there yet. But it's slowly moving, and watching the movement of the curve, especially the long end of the curve, is rather fascinating in that regard.
It is indeed. We've gone from that burst steepening now to people calling for outright longs. Good to have you in, standing by your guns there. I'll leave you with this thought. I got the price of money at LIBOR plus an 1/8. You'll never get money at that price again, Steve. I'm about to redeem that mortgage. That is Steve Blitz, T.S. Lombard, our guest this morning on rates. Coming up, Goldman takes legal action. We'll discuss the bank. It's suing Malaysia. That's next on Bloomberg.
our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
Sports and money, they've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona
to the kabaddi tournaments in India
to the cornhole boards at your local tailgate. This is what's next in sports.
Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
This is Bloomberg Brief. I'm Danny Berger in London alongside Manus Cranny in New York. Manus, we got some breaking lines crossing just moments ago that the UK's FCA, the Financial Conduct Authority, is banning the ex-Barclays CEO Jess Staley from senior financial roles. With that, too, they will be handing down a fine of £1.8 million. Joining us now to discuss is Bloomberg's Leo Kane-Sherper. Leo, how did we get to this point?
Yes, exactly. So Jess Staley stepped down as Barclays CEO almost 2 years ago, and it was already related to early findings from the FCA related to his characterization to the board of Barclays of his relationship to Jeffrey Epstein. And this basically led to him stepping down almost 2 years ago. And now eventually the FCA came out and said, OK, he's banned from working in financial services, and also handed out this £1.8 million fine.
Well, Leo, good to see you this morning, and well done for reacting immediately on the news there. The other major story this morning is, of course, it's been going on for years now. This is Goldman Sachs and Malaysia. Goldman's now suing. What is the background for this, and what do you think Goldman is actually trying to achieve by the move?
Yes, another major scandal, or I should say the biggest financial scandal, one of the biggest financial scandals ever, basically where this development fund has been looted. And Goldman yesterday filed a complaint to the International Court of Arbitration here in London, and basically to settle a disagreement over a payment that was due in August last year. Because as we all might remember, Goldman in 2020 struck an agreement where it agreed to pay $2.5 billion to the Malaysian government and $1.4 billion at a later stage tied to assets that would be recovered. And now the Malaysian government basically disagrees with the amount that should have been paid in August 2022, and now they're at this court.
Yeah, at just one level, it's incredible. We're still talking about 1MDB in 2023. Hey, Leo, thank you so much for joining us for the latest on that. That is Leo Kane-Sherper of Bloomberg News, tracking the latest financial stories. Now, we're also keeping an eye on a stock that slid almost 13% in its trading debut yesterday. That's, of course, Birkenstock. It buckled, you could say. It was the worst showing for a large U.S. listing in more than 2 years. In fact, only 13 IPOs of that size have fared worse in the past century. The question is, has our reporter stuck around after that terrible pun? She has. It is Bloomberg's equity capital markets reporter, Julia Fioretti. Julia, so was there a pricing issue with this IPO?
It seems that there was, Danny, basically. It was priced quite high, actually, even though it came just below the midpoint of the range. In terms of in comparison to its peers, such as Lululemon and Nike, actually the valuation was still quite high and quite punchy. And these aren't exactly the markets in which one can be taking these risks. And that obviously has been borne out by its performance yesterday. It opened down 11% and then didn't even manage to hold that. It fell further. So it shows that the IPO market is still cautious. There was a lot of exuberance, perhaps, a lot of excitement a month ago, but that has now abated somewhat. And so it's still at a tricky market, a market in which valuations need to be tempered somewhat. And investors are still obviously cautious.
I just want to know, I mean, you live in Dubai. Have you been to the Dior store and have you seen the shoes that are $1,000? We can talk about the broader IPO market in just a moment, but please answer that for Danny and I. Have you been to Dubai Mall and have you seen them?
No. I have other things to do.
But Manus, have you seen them?
I have.
You're around Fifth Ave every now and then.
I popped up. I popped up to the Apple store the other day, and beside that is the Dior store. And I went in and I said, "Excuse me." I said, "Do you have any $1,000?" I said, "Do you have any $1,000 Dior Birkenstocks?" He looked at me and said, "No." Let's talk about the broader IPO market. The broader IPO market. I mean, this was supposed to be a big test. We were all bulled up for this. It flopped. What does it say briefly about the broader market?
Essentially that it's still extremely cautious. It hasn't come back. It's not a full-fledged recovery. The uncertainty globally, the macroeconomic uncertainty, obviously the geopolitical uncertainty now in the Middle East is still weighing on the IPO market, still weighing on investor sentiment. And so it means that some companies might choose to go ahead and they might succeed. The Middle East seems to be bucking that trend at least. But in other markets, it's still a little bit shaky. So it's probably, we're still looking to 2024 for a proper recovery, assuming no further black swan events.
I mean, all I can say is every time now I'm going to see that BIRK ticker, I'm going to be reminded of the fact that Manus Craney refuses to buy me a pair of those Birkenstocks. I mean,
I don't even have a pair myself, and I lived in the desert for 5 years. There you go.
We can get some matching Bloomberg ones. I don't know. It can be our thing. Julia, thank you so much. Julia Fioretti there on the latest IPO news. Now, coming up, we're going to take a look at some of the market-moving events to watch throughout the day. But first, a quick check on your markets. S&P 500 futures do climb higher in opposition to some of the narrative we've heard from PIMCO saying a recession is on its way. Steve Blitz says that inflation and rates still need to head higher. You're looking at your 10-year yield. That is moving higher, just barely, though, not even a basis point, as Brent crude climbs to just above $84 a barrel after making a round trip from the Hamas invasion of Israel. We've had a show of support from both the Saudis and the Russians, that unity helping to lift markets by nearly 1%. More to come on Bloomberg.
Let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside of that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with the plan.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Brief. I'm Danny Berger in London. Manus Cranny is in New York. Now let's get you set up for your trading day with a quick look at what's ahead. The European Central Bank publishes its account of its September C policy meeting at 7:30 a.m. Eastern. That, of course, follows the U.S. Fed minutes that came out yesterday. Then U.S. CPI, that comes out at 8:30 a.m. Eastern. At a time the Fed has made some progress on tackling inflation, but of course still faces continued risks. And Bloomberg's Screen Time event continues in Los Angeles. Our special coverage today includes conversations with the co-CEO of Netflix and the CEO of YouTube. It also comes at a time, Manus, where those labor disputes with SAG-AFTRA seem to have hit a wall. They've suspended some of those talks. And again, it just adds into this picture of, has inflation been conquered? We're still having labor disputes ongoing.
Well, we're going to wait, and all eyes are down on the CPI. The market batted away that slightly hotter PPI from yesterday. Is the correlation huge or not? Some people say it's not. You can't read PPI to CPI, obviously. But my favorite word, we're 54 minutes, 33 seconds into today's program, is pernicious. Our last guest talked about, T.S. Lombard said, we're going to have pernicious inflation. You're going to have 6% rates, and you're going to have 6.5% in terms of the 6% in yield on the 10s and 6.5% on rates because of pernicious inflation, and it's a mega shift of a mega trend.
Yeah, part of the reason I love that, Manus, is because we have had all these Fed speakers come out, right? Logan, Jefferson, we heard from Daly recently, and the Fed minutes basically saying the market's done the work for us. We are near peak rates. And the market has listened to that. We've seen this huge bond market rally. So it's important to get that point of view. That's what they're saying. But is that what the data says? We haven't seen that yet.
And they're hanging on. It's a bit like me hanging on to an argument. There's blood around their fingernails, really, in terms of hanging on to the debate. Not that we ever have any arguments on this show about what we're going to do. But it's holding on to that inflation target of 2%. What is the reality? Mary Daly moves on the neutral rate. What is the real level of inflation they should be going for? But of course, the cavalry are coming. Who are the cavalry, Danny?
The home team? Is that where we're going? The China home team. Yeah.
That's it.
Yeah, they are buying. They're buying banking stocks, something they haven't done since 2015, following that great Bloomberg scoop, Manus, also of 1 trillion yuan that they'll be spending on infrastructure. It's lifted metals today.
Absolutely. You got metals a bit up. Iron ore, I like that word. Iron ore is up, it's up 0.75%. You got copper running higher on the LME. So that China story is small, but I think it shows a massive level of intent. It's only 65 million from the Sovereign Wealth Fund buying China bank stocks, but it's all about the destination. Danny.
All right, that's it from us. That's Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
The risk, to our view, is that inflationary pressures return, and that can be a function of geopolitics.
When things move this quickly over short periods of time, there's unrealized losses, there's potential for stress.
Savings are running out, combined with student loan payments coming back. All that does point to still more weakness on the consumer.
You're talking about uncertainty, that drives up the term premium.
We're not going back to what we used to call the new normal.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
4-day winning streak on the S&P 500 set to make it 5. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance Live on TV and radio alongside Lisa Abramowitz and Anne-Marie Hordern. I'm Jonathan Farrow. Your equity market on the S&P 500 positive here by 0.4%. Bramo, we will proceed carefully, just like this Federal Reserve, ahead of CPI a little bit later this morning.
Proceed carefully, although I don't really know exactly where the bias is in markets right now, because yesterday it seems like everyone completely discounted PPI. We got an incredible rally in bonds regardless. So how much is this market leveraged to possible disappointments more than at this point an overshoot in inflation? Because people want to have a bond rally right now.
What a turnaround in this bond market over the last 2 sessions. We've dropped back by more than 20 basis points in 2 sessions. Lisa, to see the 10-year here at 4.57 and a 30-year, never mind 5%, all the way back down to the 470s.
Kathy Jones put it well. There's a liquidity issue. There's something technical here going on. I do keep going back to what does it mean for broader markets and for an understanding of what this market is. If it is the deepest, most liquid market in the world that sets benchmark rates for everything, and it's whipsawing around by 20 basis points, 30 basis points more in just a couple of trading sessions.
We are really fortunate this morning to have Anne-Marie with us to work through the latest on Israel. The Israel-Hamas war entering a new day. Secretary Blinken landing in Tel Aviv today. The Israeli Defense Minister, Anne-Marie, warning of a hard and long, difficult war.
Yeah, they're talking about a prolonged war. Right now, what we see is retaliatory strikes. These are airstrikes over Gaza. It has killed more than 1,000 Palestinians, but you do have this infiltrate on the border. 300,000 conscripts have been brought up by the Israeli government. So it looks like they're about to go in for a ground invasion. That would make this incredibly difficult.
2 updates on travel regarding this war. The U.S. cautioning its citizens against traveling to Israel. The latest from Sky News reporting that families of British diplomats are being told to leave. Pretty powerful address from the president yesterday. What did you make of that?
Absolutely. He wasn't even supposed to be at this meeting. It was the Jewish leaders at the White House, and he decided that he wanted to go make another speech. He called it a campaign of pure cruelty. The president also denounced anyone that's offering any sort of justification for this. He is getting high remarks from leaders of the Jewish community, even Republicans, for the speeches he has been given about the atrocities we saw over the weekend.
The problem with this whole situation is that, well, I mean, first of all, it's a tragic, horrible thing, right? Let's just say that as an outset. There's also an incredible amount of misinformation, and there are really conflicting signals. We've heard about Saudi Arabia and Iran having one of their first calls since they normalized relations. Unclear exactly what the tenor of those discussions were. We know that Qatar is involved in this. How does this end? Right? How long is this going to be? Who is it going to drag in? How many people are going to die as it goes on? And these are some of the horrible, tragic things that we're all grappling with this morning.
We're trying to grapple and get some clarity on some of the numbers as well. The State Department said the death toll among US citizens has risen to at least 22. A lot more on that a little bit later this morning. If you are just joining us, good morning to you all. The broader price action ahead of CPI shaping up as follows on the S&P 500. We are firmer here by 0.4%. There's a lift in this equity market. In the bond market, what a run of gains we've had. 2 sessions, yields lower in a big, big way. The 10-year back to 4.57. Yields up a touch this morning, Lisa, by a single basis point.
It's CPI Thursday, in case anyone was wondering. 8:30 a.m. we do get that CPI print as well as jobless claims. The expectation is for pretty much the status quo, although what we're watching for is goods reinflation, and this to me is really going to be key. If you strip out energy, if you strip out food, do you start to see things tick up in a way that makes people a little bit nervous about just where we are in this fight? At 1 p.m., U.S. Treasury is selling $20 billion of 30-year bonds. To me, this might be one of the most interesting parts of the day, given what we saw yesterday in 30-year yields plunging the most since the March disruption that we saw with respect to Silicon Valley Bank. And if you wanted more input from Fed officials, we've got more of it. We have Fed speakers, including Atlanta Fed President Raphael Bostic at 1 p.m., Boston Fed President Susan Collins at 4 p.m. They say the same thing. Basically, we don't know, and maybe on the margins, if the bond market does our work for us, we'll let it. But on the flip side, what do you make of the fact that yesterday we get the meeting minutes and people are somehow attributing the rally in bonds to that when it's literally the same thing that everyone has been saying?
It's a strong nod to what's already happened. Right? Does it stack up with what we heard from Chairman Powell at the news conference? I'm not so sure.
I mean, that's the sort of massaging that happens after these minutes.
You think there was some massaging into the release off the back of the bond market sell-off we've seen?
I can neither confirm nor deny.
Okay, it felt that way. It did feel that way. President Collins, a little bit later, had this to say recently, likely close to and possibly at the peak of the tightening cycle. More Fed speak a little bit later. Also, just getting confirmation of this. U.S. Secretary of State Antony Blinken giving statements to the press with Prime Minister Netanyahu in the next 15 minutes or so. That's the expectation anyway, so we'll look out for those comments on the Bloomberg. Joining us now is Sophie Lund-Yates, the lead equity analyst at Hargreaves Lansdown. Sophie, just to go into the CPI report a little bit later this morning, what are you and the team looking for?
Yep. Hi, good morning. Perhaps unsurprisingly, we are, along with everybody else, certainly looking for things to have moderated. That is the word that I dislike it quite passionately, but it's one that we keep hearing. That is the expectation. And broadly speaking, I'm feeling relatively confident that is what we're going to see. But as you were just alluding to there, what I'm particularly interested in is what the core read is doing. Because I think a lot of people they get a bit carried away with that overall figure, but actually that's not going to tell you the whole story. And particularly for me, that one thing, if I had to only focus on one figure, it would be shelter costs. That is something, a word you used earlier, was kind of whipsawing, and that's been on quite a ride, and it is such an intrinsic and important number to look at when we're trying to map the consumer demand and the consumer mood. So for me, shelter costs a really big one and core overall within that.
Let's talk about that consumer mood. I feel stupid almost saying this before I've even said it. LVMH, canary in the coal mine. Sophie, really?
Yeah, I know. This has been, it's quite a difficult one because, LVMH Q3 sales overall, you're looking at a 9% uplift. But by most standards, people would say that is good going. But when you look at the level of the slowdown from 17% in both Q1 and Q2, so H1 overall was a 17% uplift. There really is a stagnation. That might be a bit strong, not a stagnation, a slowdown in growth in luxury. And the reason that this matters is that we know that luxury customers are some of the most resilient around So if they are starting to kind of draw back, think twice before picking up that bottle of Hennessy, what does that mean for less resilient consumers within the market? So I do think that's potentially kind of a flashing indicator on the dashboard for now.
Sophie, a lot of people might agree with this, right? They say that there is some sort of slowdown in consumer spending, but then they say we're still bullish because that's a perfect slowdown. It's just enough to keep things tamped down and to keep the disinflation trend, and it's already been priced in. Where is the distinction for you of what's been priced in and what hasn't been priced in? Where is the bias right now in equity markets heading into the CPI print?
Sure. So I do think that some corners of luxury, unfortunately, do have a little bit further to fall. You know, we saw a relatively sharp reaction for LVMH. I'm not talking about, you know, the bottom falling out of share prices, but I do think that there is potentially still a little bit too much excitement there. Not all luxury names are created equal. They don't all have the same kind of prowess and strength going into this. And also, I think travel particularly, I've been quite bullish on travel. I think the way that we have categorized travel spend, and we know that particularly in the US as well, people are really prioritizing experience spending. That plays into travel stocks. But some of the bounces that we've seen over the last 6 to 12 months really is indicative of this idea that we think that everything is mission complete and everything is now going to be smooth sailing from here. And I do actually think, particularly as we look into Q1 next year, we could see more of a dramatic pullback on load factors, therefore margins in some of those big travel stocks. So I think that is something that I'll be watching for sure.
There are a number of sleeper stories that somehow have gotten off the radar, including the ongoing auto worker strike, which we have seen actually percolate over to some of the most profitable Ford vehicle manufacturing outlets. We're talking about some sort of ceasefire, at least in the strike, bad words, when it comes to what's going on in Hollywood. But I'm wondering from your perspective, and then all of a sudden it's not over at all, the strike is ongoing. From your perspective, how well is this priced in? How much have people understood that some of these fights are entrenched and are going to lead to lower profitability in entertainment and in auto manufacturing?
Unfortunately for me, I think to a certain degree they are not fully priced in. We know that, so you look on the auto side of things, there are kind of quite a few structural challenges to the sector more broadly anyway. You know, people are aware that margins tend to be very lumpy. There's not that much wiggle room in an auto margin on average anyway. So there's a little bit more leeway there, I would say, in a roundabout way. When you start trying to translate this over into media and the arts, I do think that there's this notion that, as you were saying, that it'll get sorted, it'll get done, it's not going to matter. But we're going to hear from Netflix next week, and this really matters for stocks like Netflix. They are nothing without their content slate, and also consumers, as they're feeling that their income get eroded away and their spending power diminished, we are pickier now about where we're throwing those dollars. So for the streaming side of things, I do think there's potentially room for quite a bit of upset, because actually, if the content slate isn't perfect, we are simply just switching who we use. We've seen churn go on quite a wild ride since the pandemic for all of the streaming players. So that's definitely something I would say is something to be monitoring.
We're all complaining about our bills, that's for sure. Sophie, thank you. Sophie Lundy-Yates of Hargreaves Lansdowne. Something we do every week on this programme. The price of Hulu, the price of Peacock.
How do you feel
Netflix.
about that?
I think everyone knows how I feel about
Not
that.
just the price, but also how you find different sports events.
You want me to go on that rant as well?
I'm kidding, Gary.
I think we'll save everyone from that rant. TK's not here. Tom doesn't want to hear it either. He's listening over in Marrakesh, Morocco. Called me this morning.
Did he?
Safe and well. Great panel today. We'll share some of that with you. Got Anne-Marie with us all morning. Looking forward to the conversation. AMH, we need to talk about CPI and why this president, even though this economy on the surface, looking at the labour market, looks okay, inflation's moving in the right direction, why that's not translating to any success whatsoever in the polls.
It's not. It's a huge headache for this administration. Inflation constantly dogs them in the polls. The president continues to get poor remarks on the economy, and there was one really important poll last month that I think brought this all home. 84% in this USA Today Suffolk County University poll talked about the fact that it's higher grocery prices, it's higher energy prices. 84% of these people are saying it's the consumer prices going up. That is why they are not feeling that this economy is doing better, even though the president comes out every jobs day and says, look at this job market. Look at where the unemployment rate is. It's not landing.
Well, there's sort of this bizarre not understanding among the economics profession. They're saying disinflation, the rate of inflation is going down. Well, still your bills are still going up. And by the way, it's disinflating from a year earlier. So it's not as if you're seeing this big drop off. Suddenly things are stabilizing in this massive way. The recent memory of going to a restaurant and seeing the bill doubled. The recent memory of going to the grocery store, likewise. Going to see your auto insurance bill go through the roof. I mean, medical insurance, all of these things. It's jarring for people whose salaries have not kept pace.
Interest rates up as well. This came out in a survey this week. I think this is so important. New York Fed puts out a survey of consumer expectations. Listen to these numbers. A larger percentage of consumers, 12.5%, versus a little more than 11% of the previous month, expect to not be able to make minimum debt payments over the next 3 years. Imagine being in that position. Imagine being in that position right now. 12% of the country, 12.5% of the country worrying about not being able to make minimum payments in the next 3 years.
On top of higher consumer costs. And to Lisa's point, this is the Republican talking point. Even though the rate of inflation is slowing, the fact of the matter is what Republicans will tell you, a family on a whole is paying $700 and more on all their needs than they were prior. It's a big problem.
It's a massive problem. AMH is going to be with us all morning, I'm pleased to say. Coming up a little bit later this morning, 7:30 Eastern Time. So in about an hour and 15 minutes, we'll catch up with Subhadra Rajappa, the head of US rate strategy over at SocGen, as we continue to beat the drum going into the CPI report. Inflation data in America a couple of hours away. Quite a move in the bond market through the week so far. Tuesday, Wednesday, what a rally we've seen on a 10-year yield. Friday, a conversation about breaking 5%. And here we are on Thursday with a yield on a 10-year at 4.56. Live from New York City this morning. Good morning.
Countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays. Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching.
You do not want to miss this story.
Is there the kind of upside?
We want to make it real clear. We're working on every aspect of the hostage crisis in Israel. Already we're surging additional military assistance to the Israeli Defense Force, including ammunition, interceptors to replenish the Iron Dome, and we've moved the U.S. carrier fleet to the Eastern Mediterranean, and we're sending more fighter jets there in that region. And made it clear to the Iranians, be careful.
Be careful, the words of the President of the United States delivering remarks to Jewish leaders at the White House in the last 24 hours. More remarks from this administration expected in the next 5 minutes or so. Secretary of State Antony Blinken giving statements to the press with Prime Minister Netanyahu in Tel Aviv. Any headlines there, we'll bring them to you. A couple of headlines in the last 24 hours, some interesting reports. This one on the Biden administration. Anne-Marie, officials leaving open the possibility of refreezing $6 billion in Iranian oil money. this has become something really contentious in the last couple of days.
Oh, absolutely. And they're getting not just Republicans calling on them to do this, but also some vulnerable Democrats that are up for re-election, like Sherrod Brown from Ohio. He's the chair of the Senate Banking Committee, and he's saying anyone who supports terrorism, we do know that Hamas is backed by Iran, should have consequences. But you can't really unfreeze this money. It is sitting in Qatari banks. Maybe they can just make sure that Iran has no access to it.
And they keep saying not a single dollar has left that account, right?
And it hasn't been spent yet.
Okay. That's the latest on that front. Joining us now is Norman Rule, I'm pleased to say, the former senior U.S. intelligence official and senior advisor at the Transnational Threats Project at CSIS. Norman, wonderful to catch up with you again, sir. As we understand it, there has been a call between the Crown Prince, Mohammed bin Salman of Saudi Arabia, and Iranian leaders. Incredibly rare, Norman. What do you make of that call?
Good morning. The call is rare and indeed a first between the Crown Prince and President Raisi, but it is consistent with a couple of themes. Saudi Arabia, which seeks regional stability to ensure its economic progress, also has its eyes wide open about Iran. I've spoken with many Saudi leaders routinely on this issue. Right now, the international community is seeking every step possible to prevent an expansion of this conflict and pressure on Iran to keep its other proxies in Iraq, Yemen, and Syria from engaging in this war as well.
How much, Norman, given the readout and talking about how they want to unite for the Palestinian aims and to really avenge some of the Zionist policies, this is the language used by Saudi Arabia. I'm wondering how much there is this push-pull of the Middle East and some of the more moderate nations, including Qatar, including Egypt, coalescing around that message, even as they seek de-escalation.
That has already happened, and Saudi Arabia has been consistent in its public support for the Palestinians, as well as its private deep frustration with the incompetence of the Palestinian Authority and its recognition that Hamas is a terrorist organization aligned with Iran. But the reality is the Palestinian people have, in the eyes of the Saudis and many in the region, legitimate claims that must be supported. Likewise, for Saudi Arabia not to adopt this position, it would place itself at political risk of Iran, Turkey, Qatar, and other countries sort of stealing the moral high ground on an issue that is very close to the hearts of many in the Middle East.
Norman, there's also reports about Hossein Amir-Abdollahian, Iran's foreign minister, about to make a tour throughout the region. Is that potentially behind the scenes him also calling for de-escalation?
No, Hossein Abdollahian is close to the Revolutionary Guards. His position will be to encourage stronger support for the Palestinians and pressure on Israel and the United States. It's likely he'll be received by all of the regional actors. He's not a major decision maker or a mover, but he'll be part of the process of de-escalation in coming days.
What about Ismail Haniyeh? This is the political leader of Hamas, who is allegedly be having political housing, basically, in Qatar. Overnight, there was a number of individuals in former administrations coming out and saying that Qatar should be expelling this individual. Will Doha receive more international pressure?
Almost certainly. And this is a very complicated issue. Qatar is an important and valued partner of the United States. It hosts El Udeid Air Base, which is our central focus for air operations in the Persian Gulf and the Middle East. Qatar provides a lot of humanitarian support, and it has supported the administration robustly on Iran and Afghanistan. Qatar claims it does not support Hamas, but supports Gaza and uses its relationship with Hamas to pass messages and de-escalate. Hamas has been present in Qatar since approximately 2006, although the relations do go back to the 1990s. However, it is without a doubt that Ismail Haniyeh and other political leaders were in Qatar and likely played some role in the planning, approval, and celebration of this most heinous act. If this were 9/11 and a country were hosting Osama bin Laden, how should the world respond to that? And would we accept the statement that they're just using that relationship to play mediator? This is complicated for the administration.
Norman, taking a step back, there are two questions that really need to be asked based on what you just said. Number one, do some of these calls and these negotiations move us any closer to de-escalation? And on the flip side, how much does it really signal sort of percolating out of the conflict, embroiling more of the region? From the first, what are the chances, based on the conversations that you just talked about and the actions, of de-escalation based on some of the recent phone calls and discussions?
I would switch this around. Escalation is going to be a product of the drivers of the individual proxy groups in the area. Lebanese Hezbollah has taken a lot of hits in Syria and is still fighting in Syria. A war with Israel really wouldn't bring it very much and would damage its domestic position within Lebanon. So there will be a calculation by all the proxies that there's a sweet spot. How much can they support Hamas without being drawn into a conflict that damages their equities, and while showing some loyalty to Iranian pressure, since Iran provides them with the money, weapons, training, and political support to maintain their positions in their countries. So this is a very complicated dance, and there will be a lot of different players in it to, again, prevent de-escalation and to prevent the destruction of these other proxies of political stature in their respective locales.
Well, talking about a complicated dance, Norm, there's a headline across the terminal now that Israel says 97 people have been confirmed as taken hostage into Gaza so far. We talk about this precarious role that Qatar plays. Do you think Qatar can actually make any headway in trying to get Hamas to give back those hostages?
I would suspect very much that it will try and will claim that it has some capacity to do so. When you look at the 97 hostages, you ought to break that down also by nationalities and think, how will the various actors decide to protect their nationals? China has a hostage. You could see China going to Iran asking for its assistance. You could see a variety of countries attempting to use Egypt, Turkey, and Qatar to get hostages out. Here's your danger. Many years ago, in a different conflict, when we had American hostages in the hands of an Iranian proxy, that eventually led to something called Iran-Contra. We're in the early days of a very complicated war, diplomatic and economic catastrophe, and we should be very humble about thinking where this might end out. But the hostage issue is going to be the most complicated diplomatic issue for the administration.
So, Norman, with that in mind, what do you make of the conversations about a full ground invasion anytime soon?
Well, the Israelis won't rush into this. The issue with Gaza, this is a small area. We're only talking about 25 by 8 miles in size, 2.3 million people, but it's labyrinthine. There are literally, in this relatively small geography, hundreds of miles of tunnels. No military has undertaken military operations in an area such as this in modern times. And when they have undertaken operations, think the Russians, they usually respond by using thermobaric weapons, barrel bombs, and destroying this geography. The United States and Britain came close in Iraq and Syria with areas that were 1/3 to 1/4 the size and buildings that were much lower to the ground. The civilian and military casualty likelihood for this conflict, this war, is going to be extreme on all sides, and Hamas is prepared for this. Israel will not rush into this event, but they're likely to do so after a significant air campaign, which is already ongoing.
An absolute tragedy. Norman, thank you for your insight again this week. We appreciate it. Norman Rule there, the former senior U.S. intelligence official. Just to reiterate that headline, if you are just joining us, 97 people confirmed as taken hostage into Gaza so far. Still trying to get clarity, Anne-Marie, on that situation.
Yeah, absolutely. And to Norm's point about how difficult Gaza is for a ground invasion, you have more than 2 million people. Well, UNICEF says that half those individuals, 1 million people, are children.
Expecting to hear from Secretary of State Antony Blinken giving statements to the press with Prime Minister Benjamin Netanyahu this hour. When we get some headlines from that, we'll bring it to you. 2 hours away from CPI in America, going into a big bond market rally over the last couple of days. Your market looks like this right now. Equities on the S&P 500, 4-day winning streak, potentially making it 5, up by 0.4%.
for the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1.
Right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
Four-day winning streak on the S&P 500 could well become 5. The fate of today's trading session, arguably in the hands of the CPI report, about 2 hours away. The price action right now looks like this on the S&P, positive by 0.4%. On the Nasdaq, up by 0.4. Four-day winning streak. Bramo, you've got to go back to mid-June for a run longer than that.
And it all has to do with the bond market. What I find interesting is very few people are saying this is because of fundamental strength in the underlying economy. This is purely because, hey, if you get a little bit of a blow-off from the top of Treasury yields, well, then let's go all in because, earnings estimates are going up.
And we've had a big move in the Treasury market. Let's talk about it. 2-year, 10-year, 30-year. Big unwind of what we've seen recently. Yields unchanged right now, but just south of 5% on a 2-year. On a 10-year, we were thinking. We had to think about 5% on a 10-year. We're back to 456. We went through 5% on a 30-year a couple of times last week, all the way back down, Lisa, to 470.68. I keep going back to the Fed speak. They said they're going to let the bond market potentially do the work for them. It stopped doing the work for them.
And then it just went haywire, right? So then how do they respond to this? The key question to me is, at what point does volatility beget some sort of risk premium that people haven't really thought about? If we have this kind of volatility in benchmark rates, that is going to be a problem for corporate financial officers who are trying to figure out how exactly and when exactly to get financing.
Let's take it from the bond market to the FX market. The euro against the dollar shaping up as follows. The euro against the dollar at 106.21. That currency pair totally unchanged. Treading water going into this CPI print a little bit later. We've hardly talked about this. Need to talk about China as well. China's stepping in the equity market over in China today. We've got this state-backed fund buying about $65 million. It's not the size, Lisa. It's the signal you send from coming into the market and buying stocks.
Especially because they just also said that they were open to more stimulus. That was the story earlier this week. And it comes, did you see that hedge fund manager who was calling for Chinese officials to come step in, that was basically saying, please, come on, we need you to come on and get in. At a certain point, this has been sort of one of the linchpins of the Chinese market, was the reliance that market participants had that eventually they would be bailed out by the Plunge Protection Patrol. And at a certain point, if they even give a signal that they're going to act in that way, how much does that edify stocks, even just through verbal intervention?
Sounds like my kind of market. Run a fund, take a position.
Is that so?
Dial 1-800 plunge protection team.
Yeah.
And, come in
bailed out?
Underwater, not doing well over
your plan?
here. No. But that gets you in trouble in America, Bramo.
I know.
Yeah.
But
under surveillance this morning, U.S. Secretary of State Antony Blinken landing in Tel Aviv as the death toll from the Israel-Hamas war tops 2,400. Blinken will be on the ground in Israel for less than a day, meeting with Prime Minister Benjamin Netanyahu before moving on to visit other nations in the region. Israel's emergency unity government still deciding whether to launch a ground invasion as tens of thousands of troops assemble at a base near the border of Gaza. AMH, this goes back to what we talked about over the last couple of days, the potential for a full ground invasion at a time where we still don't have clarity on the number of hostages and from which country they're from.
Yeah, exactly. To Norm's point, this is where you could see a lot of international pressure come down on Hamas or maybe on Qatar, who's trying to lead those hostage negotiations, depending on what nationalities a lot of these hostages are. Though the president did say that Americans were taken hostage. So this is of utmost importance to this White House.
This is such an incredibly difficult moment for so many people, and it's igniting so many passions on all sides. But what you can see right now is the tragedy, the details of the tragedy that unfolded in Israel, and now what some of the casualties are among civilians. And you think about just the escalation of this and that many more people dying. And it's horrific from anyone who has humanity. I mean, it is horrific to watch this unfold.
The market does not have a heart. The market has moved on from this pretty quickly. I think the barometer for all of this, taking the temperature of this situation, is the oil market. And you saw yesterday, Anne-Marie, as soon as we got reports that perhaps Iran didn't know about this, crude starts pulling back.
Right.
That's the story at the moment.
Right. So the oil market will definitely start to spike if Iran becomes any closer to this hostility, of course. And there's anything happens through the Strait of Hormuz, which 17 million barrels of oil go through a day. That's when the oil market will really start to pay attention. But at the moment, they're kind of shrugging it off and just keeping an eye on it.
Inflation data just around the corner, 2 hours away. Boston Fed President Susan Collins speaking recently, saying the central bank can take more time to evaluate data because they, quote, are likely close to and possibly at the peak of this tightening cycle. The median estimate in our survey seeing a 0.3% month-on-month gain in core CPI, down from the previous read, Lisa, of 0.6.
What we saw from the minutes yesterday was this sort of more two-sided risk, which we're hearing more and more about, the risk of over-tightening versus not tightening enough to curtail inflation. To me, if you start to see goods reinflation, does that change the conversation? Because people thought, oh, we killed that beast. We can now just work on services. But if you haven't killed the beast, then what are you doing, especially if services still is seeing that inflation?
That data, that conversation just a few moments away. I want to finish on this story here. Apollo CEO Mark Rowan calling on the University of Pennsylvania alumni to hold donations until the president and chair of the board resign over concerns that the school has tolerated anti-Semitism. The university recently hosted a Palestine Rights Literature Festival, which Rowan wrote included, quote, well-known anti-Semites and fomenters of hate and racism. Lisa Penn did not immediately comment on that letter.
There has been so much pressure on universities, prominent universities, to come out with stronger statements than just sort of having this sort of blanket, we're watching the tragedies and unfold and we're concerned, and our hearts go out to everybody involved, because that's basically been the party line from a lot of these universities. There's been a lot of pressure, including Bill Ackman on Harvard. But the question here is there a broader discussion around taking a stand and true free thought at some of the universities that have taken lines and tried to be very cautious, catering to a lot of different constituencies?
Well, there was these 30 student groups at Harvard that wrote this letter saying these atrocities didn't happen in a vacuum and laid blame on Israel. And Larry Summers, the former president of Harvard, said he was sickened that Harvard University president, the administration at Harvard did not come out and denounce this the way they did of Putin's invasion of Ukraine, the way they did of George Floyd's death. And the president spoke to this yesterday. He said it's unconscionable for people to make excuses for these atrocities.
I'm going to try and catch up with Mark Rowan of Apollo potentially later this week, so hopefully we can make that happen. If you are just joining us, equities firmer here on the S&P, as they have been all week on the S&P 500, up by 0.4%. Next stop for this conversation, inflation data in America, a few hours away. Joining us now is Pooja Sriram, the US economist at Barclays. Pooja, what are you and the team looking for a little bit later?
Hi, thanks for having me this morning. Yeah, so I think on headline, we're broadly in line with consensus. We think the monthly pace of inflation is likely to step down to 0.3% month over month from the solid 0.6% we saw in August. And really what that means for the annual rate of inflation is it's going to tick about a tenth lower to 3.6% year over year. Of course, the meat lies in what the core inflation number is going to show us. We think it's going to round to a 0.3%. But a slim 0.3% month over month, bringing the annual rate a touch lower to 4.1% year over year. So really compared to what we saw in August, slight easing in price pressures, but really it's just easing on the margin that we're looking for.
Is this a sustainable trend in your mind, Pooja? I'm thinking of Jim Bianco of Bianco Research that often comes on this program and says the disinflation we've seen over the last few months is transitory. Pooja, what would you say back to that?
Well, I think there are parts of it that we think is, likely to sustain. Really, I think the encouraging trend that we've seen is the step down in rent and OER inflation. Just to give you a context, these two categories account for about a third of overall CPI and about 40% of core CPI. So really, the fact that we've seen momentum in rent and OER inflation starting to sort of step down is a very encouraging sign. And really, we think this is something that can be sustained. We've already seen data on private indicators of rents sort of normalize to those levels, and we think the BLS data is just about playing catch up to that.
There's also a question, though, as inflation does come down, then real wages start to pick up, especially if some of these labor negotiations are ongoing and able to win over some concessions. If that's the case, what is the risk then of reacceleration if consumers have more disposable income just based on their earnings to go out and spend?
Absolutely. And I think that's really the risk that we've been highlighting as well, that if we need inflation to come down in a sustainable manner, or really what we need alongside that is an easing in labor market conditions. And really, it's the tight labor markets that is, that have propped up wages, nominal wages, that have also sort of created an environment where, we've seen a lot more bargaining power with workers. So really what we need is an easing in labor market conditions. Devoid of that, it's, like you said, there are risks to the upside very much.
So to put a bow on that, Pooja, are you basically saying that right now CPI might have less significance than labor market data, especially if there is no surprise in what we get at 8:30?
Well, let's not put it that way. I think the Fed is going to be extremely interested to see what the inflation data show us. But really, the fact that they've been emphasizing on the totality of data is they're going to look at this data in conjunction with what they're seeing in the real economy side, in the labor markets. And really, if they feel that a lot of the slowing that we're getting in inflation is not looking sustainable, or it's materializing in categories which are known to be volatile, then yes, that's a signal that they're going to take from it.
A new call from Citi in the last 24 hours. Need to talk about it. They were looking for a hike in November. Base case now, no further Fed rate hikes. Andrew Honhorst over at Citi. Morgan Stanley, the last hike was in July. That was the last hike from this Federal Reserve. Pooja, do you share that view?
No, we still have a call for one more 25 basis point hike by the end of the year. Baseline for us is November, but really, I think the risks are that could be pushed out further into the year. Really, I think what has happened, like what you highlighted earlier, is, we've seen longer term rates move higher. We've seen a tightening in financial market conditions since, the last FOMC meeting. Really, we've also heard from a lot of FOMC participants who acknowledge this tightening, and some of them share the view that the Federal Reserve can afford to sort of wait and watch and see how the data evolve. But having said that, I think we at Barclays think that it's still a very fluid situation. We get some more data points between now and the meeting, which is in the early part of November. They're also going to be watching what's happening to financial market conditions in the meantime. So really, baseline for us is still November, but there are chances that they could choose to sort of wait that one out should conditions evolve.
When you say watching financial conditions, have bond yields gone back down enough to take that extra tightening off the table for the Fed? In other words, how much do they have to fall from around that 5% level for suddenly the Fed to have to do the work and not let the bond market do it?
Lost. Well, I think, they've come back about halfway down to where they were a couple of weeks ago. So I think that's something that they're going to be looking at. We don't have a number. I don't think they have a number either. But I think really the idea is to see whether this kind of a move upwards is sustainable. Like you said, should financial market conditions tighten in terms of longer term yields staying higher or moving higher even further, that's really one of the key transmission channels for monetary policy. And the Federal Reserve is likely to take that as a win if the bond market can do some of the work for them.
Pooja, thank you. Looking for one more hike from this Federal Reserve. Pooja Sriram there of Barclays. A change from Andrew Honhorst for a long time. It's been pushing this idea we get one more hike from this Federal Reserve. Still says there's a risk of getting it at one of the meetings we've got left this year, November or December, but ultimately base case now is no change. Got some changes for you for Delta Airlines. Allow me to share with you a new range for the outlook for profits this year. The new range for full-year adjusted EPS is $6 to $6.25. Previously, Lisa, they had seen 6 to 7, so they tightened that range towards the low end of the range. Guess what the blame is? Fuel is part of it. Fuel is part of it.
Well, we are seeing fuel prices, but the interesting thing to me is the reaction in markets that's on the low end, and yet expectations had already been lowered that much more based on some of the rhetoric that had been coming out because of some of the costs going up and this feeling that maybe some of these airlines can't pass along the price increases to consumers. Well, it turns out maybe they can a little bit more than they previously thought, because that seems to be the reaction in markets and the implication there.
I'm just not buying the airfare story.
Yeah, well, I think
we're told they're down, but I don't feel it at all.
My take is, if it's down by $10, that means that you get $10 less of legroom, you get $10 less of breathing space,
drink
food, and otherwise, options, hospitality. They just are a little bit not nice to you.
Talking about Delta here.
I will not disclose what I'm talking about.
Okay, of course not. Okay, all right, cool. Third quarter numbers were better than expected. Adjusted EPS came in at $2.03, the estimate $1.94. This from the IEA. This morning, AMH, the pullback reflects demand destruction. Crude.
Do you realize that overnight we had a show of force too? Prince Abdulaziz bin Salman sat down with Alexander Novak for a TV interview together, side by side. The last time they did that was with me, 2018 in Oman.
Going back 5 years. Alan Wald of the Atlantic Council, up next.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Say the baseline scenario is one in which Israel occupies Gaza is going to get ugly, but the conflict remains contained to there, and therefore the markets so far are essentially pricing this one as being the baseline. That's why oil prices have not done very much, because there is not really a threat to the supply of oil in the Gulf. But the market seems to be discounting the possibility of a massive conflict throughout the Middle East for now.
Seems to be what's happening over the last couple of days. That was Nouriel Roubini, the chairman and CEO of Roubini Macro Associates, speaking to the brilliant Francine Lacqua at the IMF meetings in Marrakesh, Morocco. Much more through the week from Francine and from Tom Keane as well. TK on the ground in Marrakesh. We'll hear from Tom a little bit later tomorrow at the back end of this week. If you are just joining us, welcome. Looking out for CPI a little bit later. Your equity market positive by 0.4% on the S&P 500. Yields going absolutely nowhere on the 10-year, 455.63. Just like Nouriel said, Lisa, to some extent, this is what crude is taking the temperature of. The prospect that we get a regional, more broader conflict in the Middle East.
And it's not just crude, but that is definitely the linchpin that everyone keeps looking at. It's also natural gas, given what Anne-Marie was talking about earlier with Qatar, their incredible role with Europe, the fact that Russia's sort of offline right now to a lot of the region. So you're seeing the response in that market as well.
86.75 on Brent. Bit of news to share with you this morning. Saudi Arabia's Crown Prince, de facto ruler, Mohammed bin Salman, discussing the war between Israel and Hamas with Iranian leaders. Adam Wald joins us now, Senior Fellow at the Atlantic Council and author of Saudi Inc. Adam, let's start with that call. How rare is that?
This is pretty unprecedented. I can't remember the last time that the leaders, or at least the de facto leaders of these countries, spoke. I do think it reflects the fact that pretty quietly, actually, this past June, the Saudi Arabia basically allowed the Iranians to open their embassy in Riyadh. It was kind of hidden under a bunch of other news and done very quietly. But I do think it signaled that they're absolutely willing to kind of, they kind of slowly pulled back from their Iran is the worst enemy of the Saudi people to, hey, now we've got an embassy and we're having phone calls. One of the interesting things that I saw in that statement was the one calling for a Palestinian state, and that's something that basically MBS seemed to have been willing to give up on in exchange for a defense pact and help with obtaining a nuclear power from the United States. And so the question is really, is that deal completely dead now?
And Ellen, this also leads to the question, was this call and the readout from it a de-escalation move or a de facto escalation in terms of a hardening of lines?
I think I see it as maybe a little more on the de-escalation, just simply because any kind of conversation between leaders like that didn't contain any kind of call for the destruction of all of Israel is probably more on the de-escalation than the escalation.
How closely are you watching not just the crude complex, but also the natural gas complex in light of what we're seeing with some of the supplies being shut off in Israel, with this morning's pop in natural gas prices, with the prospect of Qatar being involved potentially as well?
Yeah, that's, I think, a huge issue here, because not only was one of Israel's gas fields supplying regional players in the Middle East, Israel, Jordan, Egypt, with natural gas, but some of that gas was being liquefied and exported to Europe. So it's not just, the Middle East we're talking about here. I think that also when you combine that with the shutdown of the Baltic pipeline, that has really caused European natural gas prices to pop. But then at the same time, a lot of these countries have said, hey, our gas stores are ready for the winter. And we've also seen a massive increase in LNG shipments from the US to Europe that has really helped alleviate the lack of Russian natural gas. So yes, there's cause for concern, but there are definitely other options out there.
Ellen, when it comes to Iranian exports, we do know that they've been exporting more, most notably to China. Administration says that they have enough in terms of these sanctions. Do you think they're actually going to double down on Iranian exports? Because it seems like they're turning a blind eye at the moment.
Yeah, and that's really the big question is how can they even double down on this? I really think that any kind of so-called doubling down or tightening of sanctions is really basically saying we're not really going to do anything unless the United States is prepared to actually stop Iranian tankers in the Persian Gulf or out of the Persian Gulf and commandeer their oil, or they're willing to stop other tankers that they suspect are carrying Iranian oil. There really isn't much teeth to this, because sanctions enforcement all ends up on the buyer, and it can take months and months, even years, to actually prosecute. So it's not really any kind of disincentive to Iran. And when China's the main buyer, and China's the main buyer of Iranian oil by far right now, they're not really going to take U.S. sanctions all that seriously unless the U.S. Really goes after China in a hard way, and I just don't see that happening.
So this is an enforcement issue, or is this the need for fresh sanctions?
I don't think what more sanctions are they going to put that are going to actually do anything? The enforcement issue is the issue. No one should be buying Iranian oil, and yet, 1.5 million barrels a day is going to customers, most of it China. So, unless they're willing to enforce it physically, I'm not saying a blockade, but to actually stop the ships and take the oil, there really isn't much teeth to this.
Ellen, you've been studying the Middle East for a long time, and you've been tracking all of the conflicts that have brewed over the years. Given what we have seen in this particular conflagration of the tragedy on the ground in Israel, of the attacks in Gaza, what is your optimism that we are going to get some de-escalation and that we're going to get some sort of resolution in the near future?
I'm not very optimistic. This is really, really bad. I think that for Israel, it was just an incredible shock to the system, and they are not going to stop. I think it would take a massive, massive event to get Israel to stop or to, reach some kind of deal to de-escalate. This is not going to end. There is going to be a lot more loss of life and destruction before this is over.
Secretary Blinken is right now in Tel Aviv, and then he's going to go to Jordan as well. Obviously, what comes to mind is this potential normalization between Israel and Saudi. Ellen, are those conversations just absolutely dead end stopped?
I think they're dead end stopped as of now. I think that Saudi Arabia's discussions with Iran have definitely demonstrated that that's cooled down. There's a lot of speculation that this attack was really in response to Saudi Arabia's essentially saying, "Hey, we're giving up on this Palestinian two-state deal. We want this defense pact, and we're willing to, recognize Israel in exchange." I'm not sure that was all that likely to begin with, given the fact that while MBS may be running the show, King Salman is the ultimate arbiter, and he's really vehemently anti-Israel. I really didn't think that we were going to see a Saudi recognition of Israel while he was still alive, or at least, technically the king of Saudi Arabia. He'd have to abdicate or die, I think, for that to happen. So I'm not sure that was totally in the cards, but I cannot see it happening now without starting a larger regional conflict.
Ellen, thank you for your input this morning. Ellen Waldau of the Atlantic Council on the tension in the Middle East and the latest in the crude market. Here's the latest right now. The high of the year for Brent crude was 97.69 at the end of September. This is where we are right now, 86.63. I'll go back to the IEA monthly market report that they put out. Lisa, this quote here: supply fears gave way to deteriorating macroeconomic indicators and signs of demand destruction in the United States, going on to say demand destruction has hit emerging markets even harder as currency effects and the removal of subsidies have amplified the rise in fuel prices. That story about foreign exchange and the commodity market is one we've been on over the last couple of weeks.
And Ed Morris of Citigroup has been on this as well, that at a certain point, especially given the inflationary pressures elsewhere, people just won't use as much gas. They won't use as much crude. And that is sort of what this statement seems to be suggesting, which raises two questions, which is, number one, is this basically a natural limit to where the rally can go at this point in the economic cycle? And then two, does this mean that we are going to only see higher oil prices accelerate some sort of downturn rather than sort of be okay, be benign, be accepted in a more inflationary world?
So if crude is lower because of demand destruction, is that good or bad news for the President of the United States? Which one is it?
I think it's complicated, right? They obviously want energy prices lower, especially gas prices, because that is what many would call a tax on a consumer. But how does that reflect on how the economy is doing?
Honestly, it's going to be, they're between a rock and a hard place right now. You add the geopolitical tensions, they're just going to basically say as little as possible.
There's so many of these issues right now are absolutely impossible. Joining us shortly, Michael Schell of Marketfield Asset Management, looking ahead to the inflation data in America, about 94 minutes away. CPI just around the corner. Equities higher by 0.4% on the S&P. Your 10-year yield just about unchanged for once. Your 10-year yield right now, 4.56. From New York City, this is Bloomberg.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. From the world of politics,
we're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power. Live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more, but
that's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open
for regulators to do more. And that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure, with two more potentially to come.
I'm willing to have this battle.
It is vitally important. This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Lots happening on Wall Street.
There are so many factors at play today.
It remains tight in certain parts of the economy.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
Crisis is too strong a word, and words like that get used a lot.
From businesses most influential and instrumental.
America's economy needs a diversity of institutions. That's something that Wall Street pays a lot of attention to.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew, alongside Kaylee Lines, deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
The risk, to our view, is that inflationary pressures return, and that can be a function of geopolitics.
When things move this quickly over short periods of time, there's unrealized losses, there's potential for stress.
Savings are running out, combined with student loan payments coming back. All that does point to still more weakness on the consumer.
You're talking about uncertainty, that drives up the term premium.
We're not going back to what we used to call the new normal.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Inflation data in America 90 minutes away. Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Farrow. Together this morning with Bloomberg's Anne-Marie Hordern. Your equity market on the S&P positive by a third of 1%. On the S&P 500, we have been higher, Bramo, for 4 consecutive sessions into this one.
And we've been talking about how much of that's just been completely driven by the fact that suddenly in the bond market, you're getting a rally. And it's sort of notable to me that during these periods of time, bonds and stocks have traded in tandem completely, again and again, even though people said it was going to be revenge of the 60-40. Well, guess what? Not so much, unless they're both going up, and that's been the story of this year.
So the Fed sounds like it's done. For now. Does that change at 8:30 Eastern time?
Well, we just heard from Pooja Sriram was that essentially the bond market has given up some of the increase in yields or the loss in valuation that it had experienced last week, which called for some of the Fed officials to come out and said, hey, bonds, you guys are doing the work for us, so we can step back. Well, what if they're not doing the work anymore? Does that change the calculation? But at the end of the day, does it matter, right? Does one rate hike really matter all that much for market perception at a time where we're dealing with a million other moving pieces? It's sort of like the one thing we can kind of cling to. It's like rate hikes.
Well, backing away seems to have contributed to a monster bond market move again in the other direction, a move of more than 20 basis points lower on a 10-year yield. We've said it a few times over the last couple of days. It's kind of like 2 parts Fed speak and 1 part risk aversion. Let's talk about a risk aversion piece. The latest on Israel, Hamas, and that war, which is ongoing for another day and potentially for weeks and months still to come. Anne-Marie, the Secretary of State, Antony Blinken, we've been waiting for these comments from him alongside the Prime Minister of Israel, Netanyahu. What are you looking for from him today?
Well, this is a very interesting moment, too, because within 24 hours, we had a huge change of Israeli government. This entire political system is very different. This is no longer a very right-wing government. Benny Gantz is now in it. It's pretty remarkable to see Netanyahu and Gantz forming a government together. These individuals do not like each other, do not agree with each other. So you see Israel really rally behind the flag. And Benjamin Netanyahu coming out with Blinken. I mean, this is going to be another moment like Biden did yesterday and the day before that, shoulder to shoulder. That's going to be the remark. We stand with Tel Aviv and Jerusalem shoulder to shoulder.
This comes at a time where people are wondering how far this is going to go, what other nations are going to get embroiled. And that's, I think, what a lot of people are watching right now is where is Tony Blinken on that? So far, it has been unmitigated support, let alone the side of whether the House can actually pass true financial support for this effort. At this point, you know, as it percolates, how far does it go with Lindsey Graham having some pretty fiery words? Is that the view of the commonplace at a time when people are hoping that this doesn't escalate into a massive conflagration?
It's almost impossible to process the human tragedy that took place over the weekend and the human tragedy that we're expecting to take place in the weeks and potentially months still to come. Also got to catch up with the policy. I've got no idea what's going on. You wake up to news stories, Anne-Marie, like this one, that we've just had a phone call between Mohammed bin Salman, the Crown Prince of Saudi Arabia, and leaders out of Iran.
It's pretty remarkable. You would normally not see Raisi and Mohammed bin Salman get on a phone call together. And then following this, you're going to have the Iranian foreign minister also make kind of a Gulf tour. He's going to be visiting a lot of these Arab nations, going to be visiting Lebanon. But Norman Raoul said that is certainly going to be to try to stand support for the Palestinian cause.
Looking out for those comments from Secretary of State Antony Blinken at some point in the next few minutes. Let's turn to the price action. Your equity market on the S&P 500. 4 days of gains could well become 5. Higher here by 0.4%. Yields unchanged. I keep saying for once, because this move has been monster moves, Bramo, in either direction. Last week we were talking about yields higher, double digits, and now we're talking about yields lower, double digits, and for once unchanged.
Which raises the question of, okay, have we gotten the wash out of the technicals and actually can focus now on fundamentals? What we're watching today are the fundamentals, the hard numbers, which actually are comforting. After everything else, 8:30 a.m. we get U.S. CPI and jobless claims. We get a sense of just how much we are disinflating. Maybe people aren't feeling it in their paychecks or in certainly the grocery bills yet, but, you know, could we be coming down? Or are we going to see goods reinflation? And this really is the key for so many people. 1 p.m. U.S. Treasury is selling $20 billion of 30-year bonds. Yesterday, 30-year yields dropped the most going back to the March SVB issues. So we're talking about incredible volatility. How much do you throw $20 billion in and auction it off and see maybe if there is this sort of less price-sensitive demand? And Fed Speak today. Atlanta Fed President Raphael Bostic at 1 p.m., Boston Fed President Susan Collins at 4 p.m. What could they say at this point that can really move the needle at all?
I'm thinking more about that bond supply. Can you imagine if that bond supply came last week?
It would be a disaster.
Yeah, timing was good here.
I think so too.
Timing was good.
100%.
A much better week for that issuance with the firming that we've seen in the bond market so far. With us around the table, I'm pleased to say, Michael Schau, CEO of Marketfield Asset Management. Morning, Michael.
Morning.
I want to go back to this Jim Bianco question I asked in the last hour. I think it's worth asking of you because I know your answer to it, so we can have a broader conversation about it.
Glad someone knows the answer.
The disinflation we've seen over the last few months, is that transitory?
I think so, yes.
Why?
Well, because I think you had this big shock in COVID of excess demand and constricted supply, and that created a lot of. It took a long time, but it was transitory inflation, and now you have a sort of transitory deflation. And what you see is that end demand is still there for physical goods. And you've seen PPI start to spin around back into positive territory, and I think CPI will follow course. Now, I would stress it's not going to be a wave anything like as powerful as what we saw in 21, 22, but I think it is going to stop CPI getting back into the twos and staying there. CPI is going to be sticky.
Is it a mistake to sound like you might be done then at the Federal Reserve?
Well, I mean, my view, I said it last time I was on, it's really about the long end of the curve, not the short end of the curve now. The Fed has sort of boxed itself into a corner. I don't really care if it stops at 550 or 575. Because if you look at the range of long-term yields, I mean, the 10-year was at 350 in May and was knocking on 5% a couple of weeks ago. And, you know, I think that's really the question. I think the Fed has done what it's going to do in this monetary cycle. I think it's going to step away. I'm of the view that at some point in time, we're not there yet, but you're going to see some form of yield curve control brought in to stabilize the bond market. But that's, you know, that's not this week, that's not this month.
Hold on a second. Yield curve control in the United States.
Yeah.
Does that mean that essentially they're going to hold rates high, but that they're going to accelerate quantitative easing, like they're going to accelerate purchases in the long end?
I think at the end of the day, financial stability is the unspoken mandate of the Federal Reserve. They talk a lot about unemployment and inflation, but when things really come to a head, financial stability is number one. And we saw a taste of it exactly this time last year in the UK when the gilts market briefly dislocated. You know, I'm of the view that the Fed doesn't really have things under control. It's certainly not in control of the fiscal policy of this country. The fiscal policy of this country is reckless in the extreme. You know, I think at some point in the foreseeable future, you're going to have disorder at the long end of the curve, and I think that's going to be important enough that it becomes something the Federal Reserve gets involved in.
So is that kind of what equity buyers are banking on? That essentially when they come out and they say stocks can handle bonds where they are, yields where they are they basically saying because if they get out of control, the Fed's going to step in regardless of what's going on with inflation? No, I think they're just not thinking about it. I think that people spend an awful lot of time worrying about monetary policy over the short term, and the Fed feeds into this. They're constantly out there talking and like sort of hinting, maybe we'll do this, maybe we'll do that, and the sort of general sense the Federal Reserve wants to get out there is that it is somehow in control of things that it's palpably not in control of. I mean, I'd argue it's had no effect on inflation. It's totally lucky that inflation went away. It didn't go away because of what the Fed did. It went away in spite of what the Fed did.
Supply side rebalancing? Is that what's happened?
Absolutely. Yes.
Do you think that won't be sufficient then to get inflation down anymore? Have we seen the bulk of that?
I think we've seen the bulk of it. Now, the long end of the curve may have its own form of discipline. You know, I've said before that you know, effectively nothing that happened from last October to this August really got transmitted to the long end of the curve. You know, that's no longer true. We've now transmitted another 75 to 100 basis points of tightening to the long end of the curve. The question is really what happens next.
Typically, those sell-offs can become self-limiting because ultimately you start to worry about a slowdown and people buy treasuries again. What I hear from you is that you think the budget deficit is a financial stability risk that this Fed's going to have to respond to. Now, if that's the case, let's run with that. Where does that leave the dollar?
The question is whether this is unique to the United States or whether it's something of a global malaise. If it's unique to the United States, the dollar gets significantly weaker. If there's a host of G7 countries which are running similar deficits and have forced down similar paths, then it's a hard asset story.
If this is the case, then do you foresee a certain level, a certain trigger for the Fed to step in and be able to justify additional purchases at a time where inflation is still expected to be hot?
I don't think there's a magical yield number. I don't think 5% or 5.25 in the 10-year suddenly gets the Fed jumping up and down. It's more the orderly functioning of markets. You can have a very orderly market with a 10-year at 5%. You could have a very disorderly market with the 10-year at 5%. I mean, I think the quality of auctions, I think the amount of bids that they get, I think the aftermarket response post-auctions matters a great deal. You know, it wasn't that the yield in the UK was so high this time last year, but it was clearly a disorderly market. There was clearly massive forced selling in the institutional community, and that's when a central bank wakes up extremely quickly.
And fiscal policy risk was at the epicenter of that as well. Let's finish here. I can hear people screaming at home. Listen to this. Do I buy stocks or sell them? What do I do if all this happens?
I think in the short term, you know, I think there's an investable market rebound here, and I still think there's portions of the equity market that are doing okay.
Is Washington listening, AMH, to this?
Well, a lot of people are, but doesn't mean they're going to react on it.
The privilege of acting recklessly just seems to have been lost.
This is the whole thing Moody's is talking about. It's the idea of governance that is not going the direction that it should, that is concerning them.
Yeah, but if any of these officials are looking to the stock market for any validation of their concern, we hear all of these incredibly doomy and gloomy prognostications, and then investor after investor says, but actually this makes stocks a pretty good buy for now.
Just process that. Budget deficit is a financial stability risk that this Fed has to respond to and commence yield curve control. And if it's unique to America, can you imagine the dollar weakness we're going to see off the back of that? If we remember what happened to sterling off the back of that story, what happens to the US dollar if that starts to materialize?
The key thing you said, if, right? Because what we've seen, and it's a global issue. And what did we hear from Tony Dwyer? That basically higher rates are bad because this is an entire world leveraged to low rates. And it is not just a U.S.-centric issue.
If you are just tuning in, welcome to the program. The S&P 500 here firmer by 0.4%. In the bond market, some calm, stability, 456. Michael Schell, that's not the calm you expect to stay, I imagine. Is this the base case for you now?
Yeah, I think at some point, I don't think it's going to happen this year, but I think at some point we are going to have, you know, we're going to have a period of real instability, and that some of the sort of long-term funding that people have taken for granted. I look at something like the municipal world. I don't see how they manage themselves through the next 2 to 3 years.
Wow. These are huge calls, Michael.
I mean, it is and it isn't. The world will go on. It'll just be, there'll be ways of operating that became normal over the last 15 years that won't be possible over the next 15 years.
If you're just joining us and you missed some of this, we'll make sure we post the full interview on Bloomberg.com and on the Bloomberg terminal. Michael Schaub, thank you, sir.
Thank you.
Thought-provoking stuff, really. Michael Schaub of Marketfield Asset Management. Just an update on a news conference that we've been waiting for over the last hour or so. Secretary Blinken, alongside the Israeli Prime Minister Benjamin Netanyahu. That news conference beginning in Tel Aviv. Anne-Marie, right now.
Yeah, certainly is. He's there, what he calls, to bring a message to say that the U.S. has Israel's back. A pretty significant moment, especially given Israel has a complete shakeup of their government yesterday.
Yeah, to that point, Netanyahu has not been the most popular president. A lot of people are not happy with his regime in any way, shape, or form. At the same time, the feeling of anger is overriding that, the feeling of need to protect the nation.
Much more on that news conference in just a moment. Joining us shortly, Henrietta Trays of Vader Partners on the way forward, the prospect of escalatory moves abroad and the dysfunction here at home. From New York City, good morning.
source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I also come before you as a husband and father of young children. It's impossible for me to look at the photos of families killed, such as the mother, father, and 3 small children murdered as they sheltered in their home in kibbutz near Oz, and not think of my own children.
Absolutely brutal. Over the weekend, you're looking at live pictures right now, hearing from US Secretary of State Antony Blinken, giving statements to the press with Prime Minister Benjamin Netanyahu. Just a really, really difficult moment, Bramo, over in the Middle East.
The images and the stories are tragic, and anyone who is watching and hearing about everything that's going on has got to be deeply moved. It is hard every day to come in and say, well, what's the price of money? And yet that is our job. But really, everyone's thoughts and feelings right now are with what's going on over there.
This is a huge show of support that the United States is making just days after this, sending Secretary Blinken over there, having this meeting with Benjamin Netanyahu, which has had a very fraught relationship with this administration as well. well. And this just goes on to what Biden said yesterday. Biden came out yesterday and said this is a campaign of cruelty. And also that he said it was unconscionable, some of the reaction by individuals around the world to justify this massacre by Hamas over the weekend.
Just unbelievable. Tragic scenes in the Middle East over the weekend. Much more in that news conference with US Secretary of State Antony Blinken giving statements to the press. That news conference ongoing alongside the Prime Minister of Israel, Benjamin Netanyahu. Your market at the moment, if you are just joining us, welcome. Looks like this going into CPI a little bit later this morning. 1 hour and about 13 minutes away. Equities are higher by 0.4% on the S&P. The bond market yields going absolutely nowhere. 456 on a US 10-year at the moment. Bramo, likewise in the FX market, the euro doing nothing at all. 106.18.
Doing nothing after incredible volatility, as we've been talking about earlier. And it raises this question, has this all just been positioning, or has this been something fundamental? The reaction in markets to CPI that we get in about an hour and 12 minutes will be very interesting, John.
Joining us now ahead of all of that is Henrietta Trays, the Director of Economic Policy Research at Veda Partners. Henrietta, welcome back to the program. Let's not start with the escalation potentially abroad. Let's talk about the dysfunction at home. Are we getting a speaker anytime soon?
That's a great question. Our problems certainly seem trite and petty compared to the atrocities in Israel, but I do think that the adage in D.C. that you never waste a crisis is something that is bearing out. The speaker's election was something that when we went into this, we were predicting, could be days, if not weeks long. So I don't think anybody should be particularly overwhelmed by the idea that Steve Scalise, the Republican from Louisiana, didn't immediately have a kumbaya moment on the House floor yesterday. So they are trying. It's my opinion that Scalise will be the next speaker. It may take through the weekend. The House is on alert that votes could happen at any time. There is going to be some messy drama. That's what you get when politicians become celebrities, and that's sort of where we are right now. But I am hoping that the whip operation in Scalise's office has been around for a decade. They will unite with Jordan and some of the McCarthy team behind him and be the only candidate capable of getting 217. I'm personally overjoyed that it became evident quickly that Jim Jordan did not have the votes. That has always been the case. It was the case in January. It's the case today. So the faster they move on from Jordan is a good sign. Now we're just sort of going through the growing pains of accepting Scalise.
But he can only afford to lose 4